Good morning. Good morning, everybody. And as we get word out, I hope the image is much, much better. We got an education from Daniel yesterday. He said, Donald, you need to size your screen down to 1080p, so it's a little bit smaller for me to look at, but should be a much crisper, sharper image for everybody on YouTube. So you want to make sure that you put your settings in 1080p, and then you can expand your screen from there. And you'll have to let me know how the image looks. If this works, what I'm going to need to do is I'm going to have to resize all of my, and I'm fine doing it. Going to resize all of my desktops to 1080p specifically for YouTube. And maybe we should be filming everything in 1080p size. I didn't realize, when I have an expanded screen, that that it could make the screen fuzzy, right? If we shoot in 1080p, so you'll have to let me know. Does it look crisper and sharper to you all? I hope so. I hope. Here all this time. We were trying to do all kinds of things, and I didn't know. I didn't. One of those things like, you didn't know what you didn't know. Thank you, Daniel. Hey, Frederick. Looks better, huh? Good, good. You need to set it in 1080p, and it should be crisp. What was happening? It's been going on for a long time. I feel foolish. It's just one of those things. Like, you just don't know what you don't know, and then you don't know. Um, but I have a big screen, so it's nice for me to see. And then I'm capturing the whole screen and trying to broadcast it in 1080p, and we were losing the resolution. So now what we do is we just size our screens down to 1080p. I won't keep them there, most of the time I won't. But when we're broadcasting, we'll just punch them up 1080p and broadcast them that way. So it should be nice and crisp. What I'll do for you too, by the way, because this will be better for you, better for everybody. When we connect on Friday, all the screens will be 1080p. Because if I change now, they're not sized right. I won't do it. But big move overnight. Not terribly surprised. They just didn't want to. You can kind of tell, right? They just didn't want to take it down much further. I think they knew what was coming. The big trade was gold, was fading gold, right? And what a huge trade that is. Everything's a trade, right? Everything is a trade. So we're going to just rebroadcast a couple of things, let folks know where we are, and and then we're even going to try to put this image. If you notice on the members webpage, Frederick, we have a column there for testing, web testing, and we're going to see if putting the live image on that page too. So you wouldn't even have to go through YouTube. The idea would be that members, when we're punched up, we'll just punch it into the website. Would be the idea. So, any case, good to see you. If you want us to look at anything, let us know. I've got to go take a peek on Susan's computer and see how this looks. Yeah, the Tesla. Let's go see. Yeah, thanks for asking. So yesterday, let's punch in here if we can. Let's put a blank row in here and take a look at Tesla. So just before the earnings came out, we were having a little chat with Fibonacci, Fibonacci, and he was expecting, and it's fine. I'm not. It's not about being right. It's a couple of different ways of doing this, but so I don't know where it's trading. We're going to go take a peek. But what he was saying was the expected move of Tesla was going to be 26 points from presumably from the close, right? Thing closes, earnings come out, things going to move 26 points. And what he was doing to get the 26 points was he was taking the premium of the put and the premium of the call that's being paid, and saying that's going to be the move, adding them together. Um, our tool, the expected move, doesn't do that. It takes the expected move from the options formula itself, in fact, is in implied volatility. The close on Tesla was 238, give or take a few cents. The expected move from that formula, now it can be wrong, right? I mean, it's, not, nothing isn't a squared b squared equals c squared. We're not, the market's not that precise, but they can be, this options market can be pretty precise. Was 9 points, 9 points for one day. So the expectation is after market, thing can do anything. But I said that tomorrow, for one day, Tesla will be trading between 9 and 238 is 247, and 238 would be 229. So let's go see where Tesla is. Do I have the T in there? There it is. Okay, so she is up there. How many points is that from 238? But the day's not over. But we'll see. I think she'll trade inside of that. I think they'll bring that back, but we'll see. 256 minus 238 is 18. So we kind of split it. We were saying 9 points, and he was saying 26, and she's trading up 18. But the real question will be at the close today for one day. Where is she? My guess is she'll be trading below 250. I think she'll be trading 248 actually, but we'll see. So when you have something like that, though, if you have some option savvy, um, whether you, and especially before earnings, so then what you do is you get the expected move, and then sell options outside the or above or below the expected move, and try to collect that premium. But it's pretty accurate. So one of the things that we're going to probably do here too. I'm still not. I'm going to go take a look at this image. So you guys can't really tell that we've sized this down. We're still trying to get the best image. I'm going to go take a peek at it on Susan's computer. And then we have another product from Riverside. And I'm thinking that it's a sharper view. Hi, but we'll see. I was hoping that it would be even sharper. I don't understand why YouTube isn't. It says 1080p, but let me go take a peek and see what I think. Let me know. Good morning. Good morning, everybody. Um, yeah, we're not particular. I'm not particularly still. I'm not happy with the image coming through on YouTube. Um, so you're gonna find us over the next day or so, maybe even later this morning here. Um, we may even do a side by side comparison. We've got a couple of other alternatives, but StreamYard, I don't know. It doesn't look right to me. It looks washed out and it doesn't look crisp. It should be. The screen is now 1080p and we're shooting in 1080p and it should be much crisper. And I just don't like it. So we're gonna keep going. Fibonacci, let's take a look at Fib. 257 is the 1.618 retracement or extension. Let's see. Yesterday's 12.9 move. Da 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 da. Good spot for a target. Sounds like a lot of work to me, but that's okay. We were just looking at it, Fib, and Tesla. Yeah, she's trading at 257, so she's up about. Let's see. She closed at 238, 248. Yeah, I think we had it about 18 points, and we're going to stay with. I think that the expected move for Tesla for the 1 day. This was right at the close. This is the way that would be priced. Right at the close, minutes before the close, she's trading at 238. The expected move from the options market was that she would trade 9 points higher or 9 points lower, putting the range somewhere's the closing range today between 229, right? 229 and 248. So she's currently trading at 256. So we'll see. We'll see how that works out. But I think that she'll be in that range before the day's over. But we'll see. It's not to say that it isn't going higher, isn't going lower. It's just a 1 day thing. The idea and the concept here is if you're going to play options, what we like to do is come to our option tool, and it's using the options formula. We're not using a chart. We're not using moving averages. We're not using fibs. We're not using any of that. Um, we're using the option formula to calculate the expected move. And we get the wing north of the expected move, south of the expected move. And you could go out days, right? So the expected move is going to be different out 20, 30 days. But and then sit back and collect the premium. What I'm going to do, thank you. What I'm going to do is, so what we're working on behind the scenes is the image that you're seeing on YouTube. And for the longest time, some of the videos you've seen, we were broadcasting from Zoom. I didn't realize, to be honest with you. Zoom was broadcasting in 750p, which is like looking at mud. So that's shitty. So that started us down this path of looking at other streaming services. We're looking at StreamYard. They bill it as 1080p. So one of the concerns was that I didn't realize that I was shooting it from my big screen, and in that we are losing some resolution maybe when it comes down, when it gets compressed down. Um, I got this wrong here, by the way. We got to put that back at ES. So today, you guys can't necessarily appreciate this, but we sized my screen down to 1080p, and so we thought that would make it crisper. Frederick tells us it's a little bit crisper, but I'm looking at it on Susan's screen, and it's not crisp enough for me. So what I'm going to do is we have another alternative company, and it's I'm going to try to do it. I'm going to try. I don't know. No, I probably can't do it simultaneously. Well, maybe later today. Then I won't mess with it now. Everybody's here and you're watching, but we're going to um, trial a couple of other services and see if we can get this image. We get the image where we want it, and I don't know. Maybe it's just limited by YouTube. Maybe it's better at Rumble too. Hmm. that could be as well. So any ideas, definitely let us know. But we would like to get the crispest image. For us, it's high def. If it's sitting on your desktop, it's going to be high def. It's nice and crisp. So we'd like for you to be able to see it that way. If anyone else needs anything, let us know. Of course, they're bouncing the markets, and it's a new bull market, and yeah, everything's right with the world, and you know whatever. Um, Greatest game, the greatest game ever. We put back with this reduced type. We decided to put back the 1-5. It's usually 1-3-5, but we just put 1-5, 1 minute 5, and in shorthand, what folks are trying to do is we can get the machine to do this is be buying and selling the 1 minute in the direction of the 5. Um, the signal is this, the Dow. So for instance, the Dow is signaling now. This is the signal. When this box gives you a 2 and it's shrouded in white. However, what type of trade is this? This 1 minute against the 5. It is a counter trade. So we teach everybody to wave in the beginning, wave those off, not to take the counters. Can you make money on the counters? Yes, but it's more difficult. It would be better let it fail, let the 1 minute go long in the direction of the 5, and that would be a better trade to take. Of course, we're not suggesting anybody take any trades from here because you are on delay, and we're not coming punching up on YouTube to offer specific buys and sells. We're just It's an educational view. So if you got any questions about who we are, what we're about, don't hesitate, and we'll see about getting us a better image. Maybe early afternoon we'll have some alternatives here. Disappointed though. I really thought that it was going to be much crisper. There's other things of StreamYard that I like, but I don't like this. So as you can see here on the Dow 5 minute, right? This is 5 minute. So if a person had taken it with a 1 minute or a mini, yes, you're up 120, 130, 150. But it's a counter trade. It's a counter trade. Every once in a while, it can be the beginning of a new trend, but more often than not, it will fail. So if you're taking counter trades, you've got to be precisioned. It's got to be ideally programmed, and they're highly specific, highly controlled, and you'll have a high winning percentage. Um, but that doesn't necessarily mean that you're going to make more money. Did you hear what I said? You may have a high winning percentage, but you may not necessarily make more money. Winning percentage is not important to us. We track it because Yeah, it feels nice. It feels good, but it isn't a metric that is important to us to make money. It isn't. When you're going after the trend, you got to have an expectation that you're going to lose 5 to 7 out of 10 times. Now that sounds like heresy. That probably sounds like crazy talk because all retail traders, just about all, they put a huge value on winning. Winning. I gotta win. I gotta win. I gotta win. No, nope. Not if you're going after the trend. And the problem is, and this is where they can be hurting themselves. They get in a trade, they make it a little bit, they win. They make it a little bit, they win. They make it a little bit, they win. They're eating like a bird, and then if they get sloppy, they poop like an elephant. When you're going after the trend, you may lose a little bit, lose a little bit, lose a little bit, lose a little bit, and then make a lot. Okay. And so if you're riding the emotional roller coaster, oh, I lost, oh, I lost, oh, I lost, then you'll never get on the trend. Because what happens is then you get on the trend, and then as soon as your account gets filled back up, oh, I better get out because I gotta make sure that I win and I get my account back. Now there are places around that, but that's the emotional trap. And it's a trap. It's an emotional trap. The way we get folks out of that trap is, through Q School, certainly discussion, but we can back test, we can program, and we get folks trading mechanically, robotically. And yes, it will feel mechanical. Yes, it will feel robotic. But just like the golf swing, once you've done it a shitload of times, then it becomes fluid and it doesn't feel mechanical. It doesn't, it's like, oh, there was like, what, think back to what you were doing. Like, what in the hell was I doing? Why was I doing it that way? It's because the brokerages, in fairness to them all, I mean, they facilitate the trade. They'll let anybody trade, but they don't really, there's nothing out there. There really isn't. As far as I'm concerned, it's a mishmash of crap that some is okay, most isn't, and it's just a rehash of it. Um, and I'm sorry to say, I don't want to offend anybody, but moving averages, stochastics, MACDs, Fibonacci's, they all have a little bit of a place, but individually, they're not a magic bullet. The magic bullet is you. The magic bullet is trading with technology. It is. It just is. And if you can't program it, so that's the issue I have with some of these approaches. Take like Elliott Wave. I was discussing this with Daniel yesterday, right? I did the Elliott, I don't want to say that I did it, but we've been doing this a long time, right? 20 plus years. And again, I'm not from Wall Street. I'm not from Madison Avenue. I taught surgeons how to do surgery. Don't That's a story in and of itself. For 25 years I did that. Was wearing a surgical mask, back when it was wasn't fashionable. um, you take Elliott Wave, you could put 500 people into Elliott Wave for a weekend. Wave A, wave B, wave one, wave two, wave little one, little two, little B, little C, wave, 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 in wave, subwave, I mean, Jesus Christ, it's ridiculous. And the thing of it is, after everyone's done that for 500, 500 people for 3 days, and then you ask all 500 people on Monday, what is Tesla doing? And you'll get 600 answers. I mean, it's crazy. And there's millions of people that follow that shit. I'm sorry, it's just garbage. I mean, it's just garbage. We have approaches that we can teach in a couple of hours, and all 500 people will agree, black and white, where the entry is and exit on Tesla. Exactly. Black and white. And then there are of course variations of that, but what does that enable us to do? That enables us to write programs. What does that enable us to do? That enables us to do a back test. I don't know, wait a minute, Don, what's happened in the past may or may not happen in the future. That's correct. You're exactly right. So the back test is meaningless. No, not so fast. Not so fast. It's because folks don't understand what the back test is and they don't know how to use it. We use the back test as a model, as a model, so that when we go forward, we can measure our performance or the machine's performance against the back test. And when it starts to deviate, then we've got to make some on field decisions about what we might want to be doing. One of the things that we might want to do is run another back test. Why? Well, the market conditions may have changed, and the back test will make those adjustments, and then we can make adjustments. We're constantly adjusting. I don't know if the story is true, but I liked repeating it because it sounds so cool. But they said that when the spaceship, when we first launched the spaceship to the moon, that it was off course. And I tend to think that it is true, but that it was off course 98% of the time. You would think, like, what? We were going to the moon. They were off course. They were constantly off course. It'd be like off course, correct, correct, off course, correct, correct, correct. So 98% of the time, it was course correcting, course correcting, course correcting. I hadn't been there before. There weren't any street signs. So I kind of like that story. The market, the market as a whole, or the market, whatever the market is you're doing, whether it be gold or whether it be NASDAQ, in these last, few weeks, few months is a perfect example of this. It isn't like the stars, right? Years and years ago, centuries ago, when America was discovered from the Europeans, they come over here in their ships, and how was it they were able to, to find us? Well, they used something called, as I believe, from what I read, not a sailor. We got some sailors amongst us. A sextant. Now, from what I understand, with a sextant, you basically, you plot where you are in the sextant, then you fix it to the horizon, and then you fix it to a star that is fixed. And what do? You triangulate. You got 3 points, and you can triangulate and maneuver your ship to a particular island or to North America or wherever, right? The market is not the stars. So I don't care what it is you're using. You can't, unless you're Citadel and you're getting the flow in advance, right? Which they are. But we're not. You're not. Nobody else is. But some, maybe a few other hedgies are, but they certainly are, the bastards. But so therefore we can't triangulate. And if we could triangulate, to bring it back to golf, it would be like playing, and I play pretty much the same courses. It would be as if that golf ball could land in exactly the same place, exactly the same place on this, on the same hole, the same distance, and and I break out my Fibonacci's. I'm picking on Fibonacci's, or I break out my moving average, and say, that's what I want to do. Um, the likelihood that that ball is going to hit that spot from day to day on the same course, is slim and none. It just isn't. So if the market is not the stars and we can't triangulate, then what the hell are you talking about, Don? Then what the hell is it? What is it? It's, to me, in my mind, excuse me, frog in my voice. It is more comparable to the surface of the ocean. Sometimes it's very calm, sometimes it's raging. So we get, the last few months, right? It's been raging, right? And we have tools to tell us that it's raging too, by the way. Um, and and so it would be more like, um, and we have folks that are outside the U.S., so they may not know this show, but there's a show on some of the cable TVs over here called Deadliest Catch, and these guys go out on their big crab trawlers, and they go out into the Bering Sea, and they drop their crab pots over the side. And sometimes that Bering Sea is really calm, beautiful. Other times, thing is, most of the time, it's raging. It's really fascinating, and at least it is to me. Now, to the untrained eye, you know, I think the guys on the deck are crazy, right? I mean, it's a very difficult job and everything. But the guy sitting up at the top, how hard can that be? I mean, he just drives the boat. He just sits up there and he just drives the boat, and he drops the pots and he turns around and he picks them up. I mean, how hard can that be? I think it's probably a pretty hard job. Probably they make millions, right? The successful ones, their own business. The market to us is the surface of the ocean. Swing Machine Plus is your dashboard. It's monitoring these markets, also depending upon what you put in. But that's what it's doing. I can't in the span of an hour video on YouTube, and plus you're on delay, explain to you um, how to trade Swing Machine Plus. There's a lot here. There's even more to the right here. There's more that we can put in. But we will spend in Q School, we will spend um, an entire day, initially an entire day, and then we'll begin to send the person this tool and then other tools after a day or two that they can put on a chart. We encourage them to try to trade from this first. And what we want to see is something like this. Let me bring this into view. Make sure I maintain its privacy. I didn't expect to do this, but let me show you. This is a score sheet from a gentleman named Daniel. He's from Europe. Now he's been a monthly member to us for about 3 months, and young guy, very very sharp. Does have trading experience, right? I'm not saying he had no trading experience. He did, but that's what we. But then he said, "Hey, I'm ready to do the Q School done." Okay, so we connect and we get him Swing Machine, and this is what he did last week. Now he broke. This is his scorecard too, by the way. If you want one of our scorecards, let us know. By the way, Frederick, I got to send you our scorecard. Um, but I like what he did actually. And so on Monday, well, this is Monday. He traded. Now you may think, oh, he's trading 10 contracts. That's 10 contracts of the euro. He traded one of the NQ, one of the ES. Now, the reason why, and I asked him, well, why did you trade 10 of the euro? And he said, well, Don, it's the same amount of margin as the NQ and the ES. And that's correct. So he wanted to be proportionate, which makes sense. I won't go over each individual trade, but I'll go over each day. On Monday, his profit factor was 647. 647. That means he was making $647 for every dollar he expended. He had 4 trades. Now last Monday was an exceptional day, but he had 4 trades. His net was 25,851. Isn't that crazy? Tuesday, he had 2 trades. His net was 1366. His profit factor was 30. Pretty crappy, huh? No, not exactly. Because if you have a profit factor over 3, you become over 3 a money making machine. You're making $3 for every dollar you expended. Here he's made 30. Now we know that, you go from 600 to 30 on profit factor, but you can't do 600 every day. You can't do 30 every day. Wednesday, 4 trades, profit factor 2.27, 623. Thursday, profit factor 7.41, 7 trades, 3287. Friday, now he said this, and we can tell from the profit factor, and now you can tell. He had a profit factor of 1.4. Man, that was hard, Don. We know that's hard. We know that. We know that's effortless. These are all effortless. But at 1.4, it's hard. He still made $957. And he had 18 trades. Okay, it was working. For the week, what did he do for the week? His net was 32,000. His profit factor was 10.22. He made $10.22 for every dollar he expended. And he's underway again this week. Whatever it is you're doing, if you're using moving averages, you're using Fibonacci's, you're using stochastics, you're trading options, you're listening to Tom Sosnoff and the boys, whatever it is you're doing, do you know what your profit factor was yesterday, last week, last month, last year? Has anybody, even with all their math, I get a kick out of those guys. They got the math. It is math about options. I do agree with that, but I never hear them talking about profit factor. We do. Because in the end, whatever the hell we're doing, trading options, we're trying to extract cash flow from the money flow. We don't measure our result, our performance by the money. Right? We don't. You see, what's even crazier is look at Wednesday. Wednesday, he made $623. On Friday, he made $957. But which day did he trade better? Definitely Wednesday, because the profit factor was 2.27. Friday was 1.4, right? So you don't want to be grading your performance on the money, because if everything is on the money, then you can't even, you might as well not have a dashboard. You might as well not have any trading tools. And by the way, this doesn't use Fibonacci's. This doesn't use stochastics. It doesn't use moving averages. It's a proprietary program. And it isn't the only one, by the way. So don't join Stock Market Caddy. Don't join the Q School because of just Swing Machine. Don't do that. It's a great tool, but we got about 65 in growing other tools. So don't do it just for that. But it is about 800 lines of proprietary code. And it just would not work. It would just be all over the map. It just wouldn't. It just doesn't. I'm not saying that moving averages and Fibonacci's don't work. It's just that getting consistency and that's what we want, as a golfer or as a trader. We want consistency. We want an approach that you can repeat. And I won't tell anybody this is the way that we approach Q School too, is we don't say do this, do that, do that. We explain each tool, and we're trying to lay out the whole buffet table of what's available to you during ideally a 3-week plus period. But then you're going to gravitate, we assume, to something that makes the most sense, feels the best for you. But everyone's different. Um, some of the things that so if you can't control the market, there are things that you can control, and that's where things get different. And we strongly suggest that you think about those things that you can control, and you try to get yourself set up in a very disciplined business like approach, right? Now, I'm not your boss, right? I'm not, no one works for me. This is a private club. I mean, you can come, I mean, if you come at, your life, or you come at your own job, haphazardly, okay, and it works for you, great. But if you come at these markets haphazardly, um, I don't think it's going to be good. I don't think so. So what do I mean by that? What are some of the things that you can control? Well, um, what markets are you going to trade? What days are you going to trade? What hours are you going to trade within those days? Presumably. What products are you going to use? You're going to use futures? You're going to use options? What are we doing here? How much leverage are you going to use? See, what I really liked, and that just spoke volumes to me. And Daniel, I apologize if I didn't acknowledge it. When I asked him, like, why do you have, and I kind of thought I knew, but I wanted to hear him explain why did he have 10 euros? And he's, well, I wanted to be balanced. And he did, so you don't want to come in, like, if you were trading a stock, you don't want to come in and you buy 100 shares of Newell NWL for $4.50, 100 shares, and it's $450 of capital. And then you buy 100 shares of Tesla at trading at 250, 256, wherever it is, and use $25,000 worth of capital. Oh man, I didn't make any money on that Newell. I mean, you've got to be you got to be, structures. You got to be controlling what you can control. The other piece is other things. Then you get into, so you decide what markets you're going to trade. What days am I going to trade? What hours am I going to trade? What kind of leverage am I going to trade? And then you get into, like, okay, then how am I going to trade? What programs am I going to use? Um, and we have a plethora of programs, but you also want to understand, what kind of a market am I in? Is this a flat market? Is this a raging market? Is it a bearish market? Is it, where are we? And then are you prepared? Are you really prepared to follow a machine? You may not be, right? We weren't. It took me, I just got tired of getting my ass kicked. It's not, it seems really easy, but sometimes it isn't, because a person wants to be right. And one of the things, and I said this even yesterday, boy, I hate sometimes when I put on a mechanical trade and I find myself, against the machine. I really don't want to be against it. By the way, as we're talking, you say, no, wait a minute, Don. That 1 minute went short 30 minutes ago, and I didn't take it. And I could have been up $780 right now. Yeah, you would have been. And here on the NQ, 26 minutes ago, that was a counter trade. I could have made $1,600 on. Yes, you could have. You could have, right? But in the beginning, we don't teach you how to do those counter trades. we have folks waving them off. And sometimes they just got to sit and watch and see how these things play out. My guess is that they will fail and the 5 minute will resume. This 5 minute was on at 10:20. However, it might very well be that this counter trade and the 5 minute also fails, and then the whole goddamn thing sells down again. That whole notion of trend, counter trend. There's only four ways to trade, right? Trend follow long, trend follow short, counter trend, counter trend. The catch is, or the trick is, that every trend, every trend begins with a counter trend, but not every counter trend is a trend. Mhm. And so you get in there, and that's why those counter trends are are very, very frequent, and they have a high win rate if you're doing them properly. So they're very seductive. They're very seductive because but I'm not saying that that's necessarily the best way to go. You know, it would be shocking to you how little time we can be in this market and get done what we need to get done. Shocking. We're not. We developed Stock Market Caddy. We tried to relate it when we set out, and we did not set out like this. These tools didn't come about from with an idea that we're going to make Stock Market Caddy. No, they came about in the early 2000s because I said to Susan, "These markets are bullshit. This is a scam." Like, what? What? I thought we were doing the IBD. I thought we were doing the vector. I thought, earnings and revenues and PE ratios and fundamentals and cycles and macro this and macro that. And we did very well with that, right? We did. We did. But fortunately, we got out of the way of the dot com. But it took me a while. But I said, this is bullshit. Prior to 2000, they wouldn't even let you, these brokerages wouldn't even let you short a stock, just like, the Bitcoin, they wouldn't even allow you to short it. You can only buy it, buy and hold, buy and hold, buy and hold. But we set out to take control over this part of our life. And then Stock Market Caddy came about in 2012, 10 years later. And it was just because I was bored. Honestly, I was just bored. It's very lonely doing what we do. And I said to Susie, Twitter was just coming out of the ground. I said, I wonder if there are other people out there that would like to know what we know. And maybe, you know, I didn't know, but that's how it came about. But we didn't. And then people started signing up and reaching out, and then it just grew, and it continues to grow. It's the damnedest thing. It's crazy to me. I want to maintain David's privacy, Daniel's privacy, but you know, um, we have people now all over the world, and obviously a lot in the States, but folks in Germany, folks in Norway, Sweden now, um, Singapore, Canada, Germany. I think I said Germany. It's crazy, which is great. But I just share it with you. I'm happy to plug any market in. I'm happy to answer any trading questions. And and we do have there is a technique for easing into the 5 minute. By the way, the steps that we asked. Um, so like last week, we asked Daniel before he did a scorecard. We asked him to do very specific steps, and that's what he did, which was great. When I connected with him, I think it was yesterday, the other day, just the other day, we can actually get the machine not only to take the 1 minute trades, but we can get the machine to discern what the 5 minute is doing and enter the 1 minute based on what the 5 minute is doing. Or we can even factor in the 3 minute, multiple time frames. Hmm. Which is better? Well, that's the idea of using the program. Because then, and I don't need, Tom Sosnoff's, math teachers, you know, he teaches them, some trading stuff or whatever, gives them a trading perspective, and they're very good at math. I get it, but you don't have to be, because and you don't even have to be a programmer. We've already written the programs. And that's what takes us to 3+ weeks. We want to show you how to take those programs, then plug them in, and then you discern, is it better to trade the 1 minute in the direction of the five, or maybe it should be the 2 minute in the direction of the seven? Huh? I could do that. Maybe it should be tick counts. This is what you're up against. Mm? And you have a huge, don't be dissuaded. Don't be overwhelmed. You have a huge freaking advantage over the hedge funds, because you know what? They got to manage billions. They can't move in and move out in 32 minutes and make 2,800 bucks. Okay. And plus, that's nothing to them. Now, they're, of course, trading hundreds. If they had traded, if you had traded 10 minis here, that would have been 30 grand. If they traded 100, that's 300,000. And they are trading hundreds. It takes 100 contracts to move the ES, or these contracts, a single tick. It takes about 100 contracts just a tick. So they're trading thousands of these things. You just got to get in and get disciplined. Stay proportionate. Start small. Small. You can trade micros and hone your game. The biggest concern, I said to Daniel, still is a concern. It's a concern for everybody, is that folks have early success with us, and then they get overly confident, and then they leverage up too fast, too soon. There's no, you can stay in a very comfortable spot and just execute your business. Make sense? Okay. Um, for those that are coming by, I don't know how. Yeah, maybe I just do a little poll. Does the image? That's kind of where we started. Does the image on YouTube, is it better than it was, or is it? Do you feel it's about the same? Can you let me know? Um, what we're doing is, we had been using Zoom, and Zoom only broadcast to YouTube like in 750. So I apologize. It looked like crap all this time, and I didn't appreciate that. I guess I should have. Then we've been looking at these different services that broadcast in 1080p. But the problem was, I had my screen too big. And as it was going down to 1080p, Daniel shared this with us, like, Don, I think that's where you're losing some of your resolution. It's fuzzy. So we reduced this screen today, smaller than my actual screen, but we got it sized down to 1080p. But I'm still not particularly happy. I think it's better. Tina, the image is better. Okay. I think we can make it even better. So what we're going to do is, either later today, Tina, thank you, and everyone, and I'll let everyone know. So have a critical eye. I'm totally okay with it. Have a critical eye for the image. And then, either later today or maybe tomorrow, I'm going to punch back up. There's another company called Riverside. There's a couple of them. I think the image might be DT saying it's much better too. Oh, that's good. All right. See, and I just like one of those things you just didn't know, you didn't know. Um, so again, thank you, Daniel. We were just talking. I'm like, Daniel, how's the image? Only better if you yeah, you do have to go full screen, and you do have to set your setting at 1080p. Yeah, you do. Got to go full screen. You're right. But I still think it could be better. So what we will end up doing if we do this, well, we are going to do it. It's just a question, I got to make sure that I get it right. Then what I'm going to do is I'm going to change all my screens. I'll have a special setup so that I can just pull up all the 1080p screens, and I'll have them all preset. You have to change the type and everything, and then everything will be in really good image. And I'm on Chromebook. Okay, I am too. Chrome. It's Chromebook. Can you make it a full screen, Tina? So, well, this turned out to be so. Now look what's happening here. This is happening right in front of our eyes. See, I want to use this as an example. We'll go to the ES. 40 minutes ago, it went short. We were here together when it went. And if a person had taken that trade, we weren't suggesting that you do, right? But if a person had, they'd be up $2,600. But notice here, the 5 minute, so we can deduce from that the 5 minute was still long. But look what the 5 minute is now doing. It's short, and it's now confirming short, right? So we teach our folks in Q school, when that happens, we ask them to sit on their hands and let that money go by initially, and then move. But it's fine in the default view too. Okay, I'll have to look at that. But the 5 minute is now going. And so what we teach them is to go ahead and take it, but then manage the trade from the one. Now they're doing it mechanically, right? They're doing it with their eyes because they need to see this. You need to have this on your desktop, for days and weeks, and then it'll become default is at YT default is okay at 1080p. What's YT? Fibonacci. What's YT? YT default. So I'm learning YT default. I don't know what YT is. Oh, YouTube. Got it. YT default is okay. It's okay. Yeah, it's just okay. What we're also going to have to do is see, we can do this with, you know what I should do? I am going to try this. I don't want to interrupt this. So we also got to patch over to Rumble and see if Rumble has a better image there. So bear with us. I won't do it now, so I won't interrupt this session. I won't do that to you. So just appreciate the next couple of days, the rest of this week. We'll be experimenting and have a critical eye for the image. If I can ask you, you may not have it side by side, and we want to get you the best image. The other thing that we also want to be able to do, and that's the problem, some can do this, some can't, is to be able to plug the image. We have a members website, and we want to be able to plug these images into the website so that members don't have to go to YouTube or to well, they can patch in. They get a direct link anyways. We can give them a direct link, but they could also patch into the website would be the idea. So any case, this is and I guess where I was going though with Daniel, we were able to punch up the last 5 weeks the program. It's just 5 weeks. Please, I don't want anyone joining because of this, right? I don't. But you don't want to join because of one program or one thing or one trading day or one. You don't want to do that with anything. Um, you know, but we were able to show him, although he was very successful doing it, what we call mechanically. He was watching and he had it on his desktop and was doing it. Then we said, okay, what if we had asked the computer to do it? What would it have done? over the last 5 weeks. In the computer, trading the 1 minute in the direction of the five, just the NQ, between the hours of, we can actually set the hours, between the hours of 9 and 3 in the afternoon, which is where you're going to get the best margin when they're giving you margin. This volatility, they're reducing margin, which is totally okay, right? You should be, as traders, when the markets get this volatile, you should naturally reduce your margin. But the back test showed us that had we done that, his payout over the last 5 weeks was about 49 to 50,000, a profit factor of about 1.59, which was okay, right? Now, when we also draw a distinction, when we're trading mechanically, we do want we want to see that, myself personally, and as the trader, we bring back his scorecard. Um, we would I would like to see the profit factor above 3, because what we do know is, like on Friday, just like I described, when you have a 1.4 and you're making the decisions to go in and out, it's hard. It's going to feel like, man, that was a hard day. you know but when you get over 3, it feels like effortless. So for those that like to play golf, some days you go out on the golf course and, man, it's a grind. It's like, it's grinding, you know. And then some days you go out and the golf, it's like, wow, that was effortless. Just the ball is just clicking, 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 on more shots than bad shots. It's just effortless. And it'll change. I mean, it may not be a swing. It might be the conditions of the course. It might be a windy day, that sort of thing. However, that said, and using profit factor as our judge, when we're trading, when we have a trading robot on, and he's putting the trade, or she is putting the trades in and out robotically, I don't really care that much where the profit factor is, because the machine is doing the heavy lifting. So if the machine has a profit factor, I mean, it can be 1.1 and still make money. It can be 1.06 and still make money. It's just got to stay above 1. It could be, 1.3, 1.59. It doesn't have to be, 3.8 or 6.2. It doesn't have to be that high. Of course, if it is, it's great. And but I don't care, because it's a machine. Does that make sense? So, and another big part of the Q school is we try to describe all this, and then we try to get everybody um, to experience and see what they need to see, and they learn about their own emotions, their own, you know um, approach, if you will, right? And that's individual, and that's why I can't promise anybody an outcome. I can't do that. Um, but I can promise you that we work as hard as you, if not harder. We can promise you that you'll learn a lot. And we can promise you that you probably never look at the markets the same, for better or for worse. And you'll have several different ways of looking at the price action, not just swing machine, right? This is fun. This is central to what we do. But we do a lot of variations off of this, right? And we don't talk about what's over here. Remember 3-4 days ago, though. Let's look at gold, because I think Tina was here. I think a number of you were. Now I'm going to change the interval to a daily. Now, why would I do that? Well, maybe we like to trade futures intraday, but maybe I want to trade some options. So I can put, and options are going to be ideally 35 to 45 days. but I want to put them on. I want to tee that option up when it's optimal. Even though I'm planning 35 to 45 days, I don't want to just get sloppy. I want to get as much, I want that trade to be as much in my favor as possible. And we're really, really good at this, or the machine is. So I can point to it now, but there were folks that were here and heard this, and I said this, and we're bullish gold. I mean, it's not a question of being bearish or bullish, but we were, bullish gold. But where was gold the other day? It was in here. Do you remember? It was in euphoria. And I said that gold was likely to move back to 3230, and the probability, not the guarantee, the probability was 95% that it was going to do that in 20 days. But I also knew, because we've done this a few times, I was probably going to do it in a couple of days because the market's so fast. That's what we did. We mapped it out. So when we did that, now you get a decision to make. All right. How am I going to trade that? Now you need the skill set. You could buy a put on the GLD puts. You could have done that for 35, 45 days. Your probability of outcome would have only been 33%, not probability of profit, right? It's different than probability of outcome, but you could have sold a call credit spread. That's as good as gold right now. Even buying the put, good as gold, you would have made a ton. So you could have done it that way. But if you're not comfortable with options, what's that credit spread? I mean, you just have to, we will expose you to it, but you just have to learn it. Or what if, when that happened, you said, geez, maybe I'm going to put, knowing that on a daily, maybe I put the gold on an hourly time frame. And I don't know what this is going to look like. Let's go. I got an idea, but let's go take a look. Well, oops, where is it? So 21 hours ago at 3393.20, if you had shorted a gold contract, you're up 10,000. Thank you very much. Right? But but it's easy for me to do this, right? It's easy for me to show this, right? But what you're grappling with is the money. Because you'll say, well, wait a minute. I put that trade on at 33.93, and then I went down. I was down like $1,000, and then I took it off. I got scared, or I did this, I did that, all on the money. What you have to do in order to get here, to get these trades that pay out 10, 20, 30 grand, you have to leverage down initially. You have to play within your skill set. So you maybe use a micro. And so instead of being up 10,000, you'd be up 1,000. Instead of having drawn down, 1,000, you may have drawn down 100. You have to learn to go slow first. It's like everything else. And I like sports, so whatever that thing is, and you don't go up to or out to Colorado, and you don't take a bunny course of skiing on the bunny slope get, oh, okay, hey, that was great. I went up the rope toe and came down and I did the snow plow and I learned and okay, I'm feeling good. This afternoon I'm going up to the top. Oh, what's that black diamond course? Oh, that can't be too rough. I'm gonna take that. It's called getting, skiing, over your tips, right? Getting out over your skill set. So it's all the same. We could even drop this down. So everyone thinks, let's put this on a 30 minute, get inside. Would have been 14 grand. How about a 15 minute? Get inside. 16 grand. 7 a.m. I think yesterday. But the likelihood that you would get that 16 grand is probably slim and none. Why? Because as soon as you're up like 500 bucks or 600 bucks, you're going to take it off. It's not, you're hurt. Not you, not anyone here specifically. I'm not talking at you. I don't want to come across that way. How do I know this? I did it. Susan did it over and over again. I know the emotions that come with this. I lived it. I'm gone through it. I know. I know what you go through. How come, Don? How come I only have 1,000? I could have had 16. So so within my voice is setting yourself up, controlling what you can control, and then the margin levels, and then saying, hey, you know what? I'm going to get disciplined here. I'm just going to do this, and this is what I'm going to do. And get rid of the TV, get rid of all the other sources, cancel all the other subscriptions. You just don't need it. There's so much here just on this view. Forget about all the other stuff. I mean, my God, you know. And then no, at some point not gonna it's not gonna continue to increase, but we can go and look. We can go to a 5 minute. We can put this on anything, and then on the 5 minute, it's going to be more active. So you know being more active isn't necessarily the best thing. In fact, we see a lot of times new traders thinking, and I know what that's born from, that they need to trade really, really fast. In fact, one of the videos, and we have a program, actually the program that put this money in, and I kind of regret that we called it what we called it, um, but we don't want to change the name because I'm a little superstitious. But it's a program called HFT2, High Frequency Trader 2, and we did a video on high frequency trading, and it's actually the most watched video, but it draws in, and I didn't mean it to be, because it isn't high frequency like Citadel high frequency. They're doing high frequency because they have the order flow in advance, and then not only do they see the turns coming, they are affecting the turns. It's a license to steal. It's like having the outcome of the horse race in advance. You know, I mean, it just is. We don't have that. Um, and HFT2, it can be run really fast or it can be run really slow. I actually like running it slow. I like running everything slower because I don't want to work that hard. And I know that, I just let them go. Now we're going to be sitting here. While we've been sitting here, at 11:30, the 5 minute then got in the direction of the one, right? So if you had waited, okay, and you went with the five, yes, you're up 11:30, 1100. You're up 2000. Now, what you don't know here, and we can show you during the Q school, right? Q school is one-on-one too, by the way, and we're completely full for April. We you know um, we schedule all during the summer. We're going to be here all summer. We'll be taking some time. We will stop on around November 1. We have a limited number of licenses that we issue every year. Once they're full, that's it. Um, what was I going to say? What I wanted to say is one-on-one, what we can do is we can see this program that's putting in this trade on the 5 minute. We can go in, plug it in, go back 5 weeks, go back 5 months if you want, go back as far as you want to go back, and we can discern some very interesting data. Now, the overall performance is going to be interesting for sure, but some of the what are some of the things that you might want to know before you sit your fanny down, before you commit your capital, right? If I'm going to do this, Don, I would like to know, should I do this between the hours of 9 and 4, or should it be 4 in the morning and 8? What if I do it between 6 p.m. and midnight? Is that any good? We can go in and look. And I can tell you right now, you're going to do much better between the hours of 9 and 3, like on everything. Everything. If you trade during normal session hours, you are going to do much better. I'm not saying you can't make money at night or earlier in the morning. You can, and there's sometimes a little less risk, but you're going to do much better during normal session hours. You might want to know, what is the average winning trade? That could be interesting to know. So, for instance, here, if the back test over the last 5 weeks says, Don, the average winning trade is, are you Eastern or Central? We're Eastern Standard Time. I'm in Tampa. Tampa. Um, if the average winning trade is 1,500 and you're up 2,000, well, then maybe you do want to take your money. And if you use micros, by the way, maybe you take off half of them, right? So I do like micros. I mean, because 10 is a mini, and you can scale your risk. And we have a lot of members that do that. And I think it's great. We didn't have micros when Susan and I started. So it's great. Now, if we know what the average winner is, well, we should probably know what the average loser is. And we can look at that. And then we can actually get what we call, if you now know what profit factor is, we can see what the risk factor is. How much do we have to risk to how much we have to make? And Swing Machine consistently on any market, any interval, has very favorable risk factors. I'm not suggesting that it's going to print you money, although it feels like it a lot of times, but it gives you very favorable um, risk factors to give you, hopefully, a favorable profit factor. Think of it another way. Think of it as a fish finder on a boat. You got a big lake. You're up there on Lake Winnipesaukee up in New Hampshire, and you want to go, or Balsh Pond, and you want to go fishing. You know, all right, maybe from history, where to go, but maybe you don't. Maybe it's the first time on the lake. So you get your fish finder out, you pull into a cove, and you're like, oh, there's a lot of fish in here. Okay, let's go fishing. Swing Machine is a fish finder. But your job is to catch the fish and get the fish to the boat and get them on a stringer. Take them home and eat them. That's our job. You notice I equate trading to everything but trading, because I don't really think about the money. It's a sport to me. That's why it's so much fun. It's a sport. It's a sporting event. Other things that we can glean from the back test. We can glean, what is the run up? What is the rundown? We can also glean something called the maximum adverse excursion compared to the run ups. Well, what would that show me, Don? Well, that would show how much of a risk. Where should you put your prevent defense? Prevent. See, when we teach our folks during the Q school, we have to teach them, or we want to teach them, don't have to, but we want to teach them how to use the machine to get stops on, to bracket those trades. But where those stops get placed is critically important. You set them too close, then they get too noisy, and people set them based on just the money, and that's not so good. And and they get too noisy, and on the other side, they could be too wide. So another comparison might be, to a football game. You know, they talk about a prevent defense, right? When you're up, right? And I do it that way, right? So I mean, we're up for the week. We've had a very nice week. We're not trading right now. I don't. It's fine. We've had a very nice week. Close to $4,000 to $5,000 for the week. Trading one, actually, well, the NQ, but we traded. We have slipped back, right? We used to trade one mini. Well, we cut it back. This money was produced by four micros. So when the volatility increases like this, don't bitch that your margin got knocked back. You should be knocking it back because you don't need as much. You don't want to use the same. So if you've been trading a mini, and then the volatility increases like this, you may not be ready for that. You got to knock it back. And I think it's responsible of the brokerages to not. It is responsible for them to knock it back, but you should be knocking it back. We all should, and we do. We do. And we still get done. It's amazing. It's beautiful. And then when the volatility comes in, the margin levels will go back up. But we're not doing it because of that. I mean, we have the capital that we need. But then when the volatility comes in, we'll increase our margin a little bit, like to a mini. I'm not going to go bonkers. Don't have to. Um, but something like maximum adverse excursion. So we're using that back test to get the information we need to help manage our expectations. You see, because when you're doing something that whereby you don't know what to expect, you're going to be anxious. And that is why we do the Q school. So if you're within my voice and saying, "Oh man, this guy's hawking his annual memberships," no, I'm not. I am not. Nope. Because you could, and we've done this. We've had folks that maybe didn't understand, and they send me all the money to be an annual member, and I turn around and I send it right back. I'm like, you didn't really listen. Like, you got to do the Q school first once, and then you decide. And then if you want to decide, then we're going to give you back 30% of the Q school, and then you go. So we're actually slowing it all down, which is totally opposite what everyone else is doing. Um, because I'm actually trying to give people a chance to say no, yet, and no, I don't want to do this. This isn't what I want to do. I think this, I think that. I want to do. Um, the other beautiful thing of stock market caddy that has come about that I didn't anticipate. Right. So this is always the thing. This is, which is so great. Right. Is things happen that you don't anticipate, good things. So I thought when we did this, because when I described to Susie, I had this idea. It was from watching that movie Bag of Ants, which I won't digress. I'm like, geez, there's that scene. Remember, there's a scene in Bag of Ants where the golfer's bent over and he's shaking and it's real noisy, like he's in a gun battle or something or in a war zone. And in having been there with golf, I've seen golfers. I've never got quite there with golf, but I don't think I have, at least not recently. And they start throwing their clubs or they just quit. And but the scene struck me, and I stopped the movie and says, geez, thought. And I'm like, I was thinking about trading, and I was like, there were times. There definitely were times in the early 2000s, the mid 2000s, where I said, geez, I wonder, boy, this is a lot harder than I thought. And, but fortunately, bear with me. Okay, I'll be back in about 5 or 6 minutes. We'll let you watch. I'll finish that story, the Bag of Ants, if you want to hear. Okay, I'm sorry. I had to run the pup out. But I was just thinking back. It's always nice to sometimes reflect, and but I just want you to know I know what you go through. I know. Uh, I did it with Susie. Years ago. Um, I used to trade very visually. There's even a book out there, Trade What You See. I'm not a big um, proponent of that any longer, um, because, and I can certainly do it. Candles and whatnot. But I started to see things that weren't there, like, and the candle thing, by the way, for trading stocks, that's like 1970 stuff, right? And I have Neeson's book. It's about $100 book. I've had it for years, decades, and literally, this may sound crazy, right? But it came with flashcards. And Susan would sit opposite me. It was like I was running my multiplication tables, and as a kid, and she'd hold the flashcards up, and I would immediately identify the candle pattern, what it meant, and what the trade option would be. Card after card after card. And I was like, it's quite a few of them. Um, it was a little crazy, right? And I was very, very good at it, but it got really, really old staring at a screen all day. And then I began to see patterns that really weren't there. And I got very disillusioned. Um, and there were many times too, like in the early 2000s. I just we don't talk about this much, but there were times when I would say to Susie, like, I don't know about this. Maybe it's a lot harder. Maybe I can't do this. Type thing. Where I was on the verge of quitting, never really did. But fortunately, Susan, no, we're not going back. Though we can't go back. Was kind of it wasn't that we had burned the boat, but we kind of had burned the boat, right? We had already learned enough. We had already made the decision. So there was no going back. Like we weren't going back to, nothing against Edward Jones. We weren't going back to the Borker broker routine, and we weren't going back. But Susan, and maybe this is a male female thing. Um, she wasn't what do I would say, on the visual side of things. Um, she was a little more risk averse, so I was a little more of a risk taker. But she wasn't that that adept really at the imagery. But the other thing is though that what she was very adept at was the math behind the price action, and and she would ask me these questions, and I'm like, okay, why are you even asking me that? I'm serious. I do. Now, fortunately, I was very patient because, we were trying to find our way. But I'm like, why? Why are you even asking me that? She'd be asking me things about, the highs, consecutive highs. And I'm like, what are you looking at? Why are you even asking me this stuff? So um, she was just looking at things from, I can say, as a math background. And, and and I'm proud of the fact we've been together a long time. Susie's SAT scores, were much, much better than mine. She can't spell, but she's really, really good at math. And uh, uh, her school, her grammar school, they were teaching them a new way to spell or something. I learned the phonetic way, parochial school. But in any case, but she's really good at math, and we know this because also too, I wanted to go to work in the day. The Google of the day was IBM, and I interviewed at IBM more than once, and never got a job. Never, I didn't even get a call back. Now I don't know if I did this. I probably did, but Susan back in the day, she actually got recruited by IBM, which kind of was good, but I was kind of my nose was a little, oh, geez, I wanted to go to work for them. But after she went to work for them, they they sent her a notice and they said, by the way, you can join this society called Mensa, which Susan always likes to remind me of. And I, what the hell's Mensa? Oh, it's the High IQ Club. What are you talking about? Willis, what are you talking about? You got a high IQ? Like, yeah, IBM had me take an IQ test. Like, what? So they had, I did not know. I probably did it too when during her hiring process, they had her take a high IQ test. And after she got the job, now I don't think she didn't get the job just because of that. But afterwards, they let her know what her IQ is. I won't say or anything, but she always reminds me, like, I am Mensa. The point being is she's math. And now when it comes to options, when it does come to options, it is all math. It is. Um, and there are others out there that say it, and I'm in agreement with them. I absolutely am. Options is it's a math creation and it's a math solution. It's not going to work all the time, but it is definitely a probabilities. If you do the math first, though, then then look at your charts. Now there are others out there that say it's pure math and looking at the charts is a total waste of time. I don't subscribe to that, but you do want to do the math first. Which, by the way, let's go take a peek at Tesla. Let's go. We should punch that little bugger up there. Let's put it in here. We were looking with, and now I haven't seen it here at a blank row. The math, our math on the option said that Tesla after earnings was going to trade today, would close within 9 points of yesterday's close. You might say, well, that's no big deal. Well, it is a big deal because with options, you just got to get in the neighborhood. So she closed at 238. Tesla should, if the option pricing was right, should close within 9 and 8 is 247 or 229. But where is she now? I'm just curious. May not, but 253. I'm willing to bet you. I will see. I wouldn't be surprised she closes at 248. It's frustratingly. I guess we can leave it up there if you want. But if you do the math first and then look at your charts, we can put Tesla on a daily. We're interested in the daily. Because if you can get that type of specificity, then and you have option savvy, then you know where to place your options. You just place them outside, and and you'll be fine. In any case, but so between the two of us, um, we had Susan had coding experience. I had a little, but I had to get retooled and learn, and and then we started to develop a systems approach. Swing Machine was not the first, right? This wasn't first. Remember, I mentioned the now I'm going to have to jump to a screen that is not 1080p. So let's see how this looks to you. Let me show you. This is Pebble Beach, and this so I haven't reset them all. This will be curious how this looks to you too, by the way. So it's going to get cropped when I come here. So it's really big, right? Because I didn't set it to 1080p. How does that image look to you? Is that pretty good? Probably fuzzy, I would think. Maybe not. But you can't see the whole thing because I don't have it at 1080p. So what is this? This is I can't size it all down now, but I will ultimately do this for you, everybody, so that we're not doing this to you. But this is called SMC Trade Generator Pebble Beach Triggers. So remember, I talked about learning candles. So we wrote a program. Is it good? Okay, so it's good, not great, but good. Okay, acceptable. We'll get it. So Pebble, here's Biorad. It generated a buy at 238. Now it's possible that it gapped, right? With stocks, there could be a gap here. But these signals are today, 238. Let's look at Bio. It actually would have triggered yesterday. So it's also carrying it. It'll carry this signal for 3 days. You can set it down to just a day. So this would have actually triggered yesterday, which would have been beautiful. Is this probably 230, 238 down in here? That was the entry price. And then it gives you a stop and it gives you the date. I have it set. I have it set for 3 days. So it will carry my signals for a couple of days in case I miss them. But you can have it set for just one day, and then they'll only show you what's populating today. Not unusual at all. Let's show you how many it's scanning 500 stocks, and there are 29 signals, and every single one of them is profitable. Isn't that crazy? It's really, really good. Now, I got to tell you something though. Trying to do this manually or looking at a screen and going from stock to stock would just drive you to drink, you know. And I don't drink, but it's just e-ticket to crazy town. It's just crazy to try to do this. Now, the purse is calculating a $10,000 trade, but you could use options, a fraction of the cost. It's very, very good. This code took us 3 months. Probably wouldn't take us that long today, but it's very, very intricate the way that it works. And this was really the one that was our first entree. And we were doing it to trade stocks and then options. So this is really old and it's really, really good. And you can change the interval down to 15 minutes because what I would do, this is in the early 2000s, I was trading stock in the early 2000s, and I was trading a 13-minute time frame because it divides out evenly for the day. And I was buying and shorting shares, not so much options. And I was using what in essence is this approach. It's a great tool. So I'm sorry that it's kind of convoluted here, but that's where we started. And then we started to say, okay, we got our success. And then we said, okay, now we got to make better use of our capital. And we started with futures. And we'll go back here. Oops, that is, well, you can see this. This is a good view. It's cropped, but you can see it. So here's the ES. That's where folks get confused. The ES on a daily went short 41 days ago. And you'd still be up 31 grand, right? 52 grand, 17. The VIX is still long, right? But so this is the daily trend is still down. I don't need a chart. I already know. And there's a lot more over here that I can tell. But I don't understand, Don. But you're long down here. Well, that's on an hourly basis. Oh, so 26 hours ago. Now, how could you have done that, right? And we do teach this too, right? I mean, this is what hedge funds do. This is how you hedge, wedge, and edge into long-term trades. See, a retail trader will just go in and get short, on a daily, make $500 or $1,000 and then leave, they're over leveraged. Or they get up, and they, maybe this thing was up, 45 or 50,000, was up a bunch, and they came out. But see, what you could do is, let's take the Nasdaq for instance. Say that 26 hours ago, you get a long signal on the NQ, but you're short the Nasdaq, and maybe you're short with options, and you'd really like to stay in those options. You don't really want to have to come out of them. Well, then what you could do But you could even do it with futures. You go long the Nasdaq, and you could even be short the mini here and be up 52 grand, and you could go long the NQ and just do 10 micros long. So you'd still have your 52 grand, and you would have hedged you'd be up 8 grand here. So you'd still, and when you do that sort of thing, when you learn to, first thing is you got to learn to trade, and you got to learn those things about you and how you're going to do this and how you're going to approach this, and get your confidence right. That's something I can't give you, but you work to get your confidence, but then you can begin to do this sort of thing. Why would you do that sort of thing? To smooth out your account volatility. Your account volatility, it smooths it out, and that's what hedge funds do. So in essence, you're running your own private little hedge fund. So this is much better. This is sized. That makes sense. I'm happy to plug in any tool. Um, we're not in any way, shape, or form suggesting that this is for everyone. It isn't. It isn't. Right. It isn't. You and maybe the 12 folks are here. You got to be very special people. This has to be something that you really, really want to do. Um, and I already know, Tina's not a member yet, but she's been shadowing us for now a couple of years. Um, so she's around these markets every single day. I mean, she's doing something, that she really, really wants to do because she's here all the time. DT, um, sounds like Fibonacci is too. So, um, it just does because, you'll have, weeks like Daniel had last week, and then there'll be other weeks where you have to struggle, and it has to be that passion that, keeps you, in the game. And we got some things that we teach to try to, that learn to pace yourself and quit your days early, quit your weeks early. Don't be a hog. Don't. I'm totally fine, right? We've had a great week here trading 4 micros. I don't have to try to get it all right. And this morning I wanted to work on the screen. This folks here, I just wanted to chat with you. I I'm not here trying to get it all. Leave that for Abby. We take Abby down to the dog park with the other dogs, and we keep bringing. We bring like one ball, right? One of these go where they fetch it balls, or they chuck it, and she hoards it. Right? She won't let any. She won't let Ted have it. She won't let any of the dogs have it. So we bring a second ball. No, now she's got 2 balls in her mouth, and she won't let any of the other dogs have the other ball. It's kind of embarrassing. Yesterday, we brought 3. She's got all 3 in her mouth. I think if we brought 4, she's going to get all 4 in her mouth. But she's having a hard time managing 3. She's just got to have it all. Don't, you don't have to get it all. There are 24 trading days in a month. Take Fridays off. Get done what you get started early in the week. Don't plan on working Fridays. Take Friday off. Get yourself into a 4-day work week at most. Now you're down to 20 days. If you extract $100 a day, it's $2,000 a month. If you extract, 200, it's 4,000. If you extract, you can just do the numbers from there. And that's what we're doing. We are getting paid for providing liquidity in these markets and taking the risk and putting our capital at risk, and we're getting paid for that. Now, Nobody else in the world, nobody else, not your neighbors, not your family, they're not going to get it. They don't understand the markets. They don't understand. They have no idea what they're doing. They have no idea what they bought or sold. They have no idea. And that's okay. That's totally okay. You can't save the world. You only have to be concerned with your trading. And the motto behind Stock Market Caddy is learn to trade your game. What I do doesn't matter. What Daniel does doesn't matter. It only matters what you do. And we try to make it fun, but we're I mean, this is, we got very, very successful people as members, very successful, incredible backgrounds, incredible educations, doing incredible things, and are going to maintain their privacy, but it's wild. And but they're grown men and women, young and older, and the ones that that survive and thrive are the characteristics they notice. They're patient, they're disciplined, they're um, curious, they're really passionate. Like they just they just stay at it. I mean, there's no quit in them. There's none. You know, but that's not everybody. That isn't can't it can't be right. It just can't be. And it's a hoot. And if you think if you have a goal of making $100 a day, you also have to realize that you've got to be prepared to lose $100 a day, right? So if your goal is 100, you might lose 100. We don't want you losing 1,000, right? So there are things that you can do, but you have to know that if my goal is to make 100, I might lose 100. If my goal is to make 1,000, I might want to, I have to be prepared. Can I lose 1,000? Can my account handle it? Can I handle it psychologically? Right. So, for instance, I had a gentleman call not that long ago, and I want to make now and he had no trading experience, none. And I said, okay, how much money, do you need to make on a monthly basis to make it worth your while? But he's got no trading experience and he's just starting out. Um, and he says $10,000 a month. Okay. All right. 10,000. And now he did disclose, um, which I'd rather not, but he did. And he said, but, when it came out, he didn't even say, but I was saying like, well, if you're prepared to make 10,000, are you prepared to lose 10,000 in a month? Now, and it's unlikely that that would happen. I mean, you'd have to lose on every single trade, right, to happen. But are you prepared to lose 5,000? I think that's how it came out because they said, "Are you prepared to lose 5?" He's like, "No, I only got 5,000." I mean, come on, you know. I mean, you're not going to a person's not going to come into trading. I don't care what it is, options or stocks or in the span of 1 month, um, take 5,000 and do it consistently. Um, Now you can, and with a little bit of a caveat, you can, and that's the thing about options. With an option, you can get a lucky hit or two that can, certainly, do that. But doing it, consistently. What I'd rather see a person do is take like $5,000 account and sell credit spreads for like 3 months, and then you could do pretty well, and do it regularly, as opposed to just hitting one. That makes sense. All right. I kind of rambling on here. I won't keep everybody. I'll be here nearby. Got to do a few things. We're gonna let you watch. Tesla's coming back. We got a little side bet with Fibonacci. I'm gonna say that Tesla is gonna close. We were saying this yesterday. Tesla closed at 238. I did say that if I was to play Tesla on a daily, I would have played it to the long side because she was down in here. I would have preferred her be here, but she was down in here. It's kind of interesting that the midpoint here was 248. It's still 248. But I also said that the expected move was good or bad would be 9 points. And what I would construct though, I wouldn't buy the call because I'd overpay for the call because the implied volatility was high. That's why the premiums are a little misleading because people overpay and push those premiums to where they don't belong. Fib, if Fib is still with us, because what Fib was thinking was that it was going to move 26 points because he was taking the premium of the call and the premium of the put and adding them together to get his price. No, because they were overpaying. That's why they lose. They came up snake eyes today. Um, what I would have done, we didn't do it, but what I would have done if that was the case, I would have gone 9 points up on Tesla, which would have, I was saying about, 250, but really 255 would have been better. I would have sold the call at 255 and maybe bought a call higher, done a call credit spread, or better because I was more bullish, go down 9 points, which would have been 229. So maybe go to, 225, 230, 225, and do what? Sell a put and then go down to like 220 and buy a put. I'd have to, cost that out and have sold a put credit spread and that's golden. You're good. That money's going to accrue to you. And if you've got more option experience, push it back to a 5 minute, sure. So Fib wants it back on a 5 minute. We'll do that. On a 5 minute, 4 o'clock, 2:30. She was buying it at 237.98. Interesting, but she doesn't trade overnight. So, um, and then you could have done, the wings, right? And you do the spreads north and spread south. Tesla stays stuck here in the middle and let those premiums accrue to you. And do that sort of thing with a small amount of money and just do that routinely and let it become real mechanical. All right. Um, the the monthly memberships to Stock Market Caddy get you a video every night of our algos, and they're chock full of opportunity. Not from me. I'm not drawing trend lines and moving averages and RSI and time cycle. And I'm not going to talk to you about quad one, quad two, quad four, and the economic mumbo jumbo. I mean, my God, you know, I want to barf when I listen to, DiMartino being interviewed. Oh, thank you, DT. Thank you. What's going to happen, DT, um, is you're going to receive today or this evening, you're going to get an invite to to set your own password to our members website, and then you just want to go from there, and you'll see where the nightly videos are, and then there's some tutorials in there. And then as you go, if you got any questions and or you're doing something, you like to trade options or anything, you let me know. And this goes for everybody. There's a monthly, and I can particularly help you, use the tools and the videos will too, for like option swing trading. Also, so thank you. And new monthly members, um, and we're going to do this on Friday for Frederick. He's in Sweden, and we're going to connect on Friday morning, and we're going to give him a tour um, for about an hour of all of our things that we offer, a lot of stuff, and then let him hang out. Not through YouTube, it'll be a private link. So that will be, should be much better image. Um, so we will do that. But thank you. And just go slow. Um, so aim small, miss small. Um, as we learned, we have a member that is a quasi professional golfer, and he talks about aiming small, missing small. Thank you, DT. Now, just to carry it forward, this is okay. This is where it gets a little mixed, right? The market gets a little mixed. Um, we look at the VIX, the 5 minute. We do like to slow it down. So the VIX goes long at 11:20. So that's caution. That's caution. That's giving us in that VIX. We don't think it can be rigged. I think it can be turned off. I didn't like the fact that Secretary Bessent was talking about the VIX, but he's a trader. YW. I don't know what that means. Oh, you're welcome. Yep, there you go. Um, and but now we're in a situation. So what do we got now with the 1 minute ES, for instance, here? Well, we got a counter move. What do you mean, Don? Well, the 5 minute is still short. So 4 minutes ago, if a person went long on the 1 minute, um, they might make a little bit of money, but the likelihood is that that long is going to fail. That's up a couple hundred, right? You can make money doing, counter trends. You absolutely can. And but we don't teach that first, and we teach people to be very aggressive and quick to take their money, and we can also find out how much those kind of trends generally pay out. The likelihood is, we'll see, I could be wrong, right? um, I'm just going to stay with this as an example, as a teaching moment. If the 1 minute stays true and continues to run, then the 5 minute would go into what we call a rip. It's still a short, but it starts ripping up, and it'll start to lose money on the short side. And then it could light up white. These are not long entries, by the way. They say long entry, but they're not yet. They're still shorts. They're still showing up. So gold still on a 5 minute here, as an example, is still short. If the conditions that set this off stay true for one more 5 minute segment, then you will see this box turn completely green. There it is. There it is. So now gold is now on a 5 minute is now long. Is now long. And now to trade on a 5 minute level with a futures contract, you got to be prepared for bigger payouts, bigger drawdowns. But what we teach folks to do is, if they go ahead in initially, manage it on the 1 minute. If the 1 minute goes short, get out. And what we're doing is we're teaching them something very small, very basic. And like in golf, when you go to a good instructor, that you don't hit the driver, like, hey, bring that driver over here and let's start smacking it. No, you get a pitching wedge, and you just start clicking the golf ball. Just click, click, click. You just got to, get used to, get the proper grip, get the proper thing, and just kind of click the golf ball. And then they expand the swing from there. It's a kind of like a graduated method. Skiing, same thing. When you learn how to ski, they teach you, at least they used to. That's the way we learned how to ski, on very, very short skis, right? and then you got really good on the short skis, and then they expand the skis. So what we're trying to teach folks to do is to trade small, incrementally, and just learn to click the trades off. Click, click, click. Like, okay, I can make money doing this. Yeah, I can do it. Okay. And then, maybe it takes weeks and months, and then, okay, I can expand it. I get it. And, and you don't ever have to, I don't play golf from the tips. I'm not that good, so, you don't have to. When we go skiing, which isn't anymore, but we used to, but we don't anymore because we don't ski enough, and when I get hurt. But we used to. But even when we did, we didn't ski black diamonds. No, I mean, we'd go to the top, but we would ski, some of the novice trails or maybe an occasional intermediate trail, right? And had a great time. It should be, we want it to be fun. So the likelihood is that this ES, yes, it did run up. There was a chance to make money, but it's likely to fail. And if it does fail, what'll happen is this will go into a dip, and then it'll light up long entry. That's still not the signal, and then it should turn completely red, and then you would get a 2 in here, and it'll be red and shrouded in white. That would be the entry to do what? To get on the back of that 5-minute trend. What we're trying to do is get on the back of the dominant trend. Now, there's only so far you can go, right, on these trends. You can't extrapolate, and we know this because we've measured this, and mathematically you might think, well, if the daily trend is down, which it is, then I should only take shorts. Well, that's too far away. That's too far away. The daily trend is just too far away to have any meaning for the intraday, because you can have, these vicious counter trends, intraday. So when we're trying to edge into the trend, we use the 1 and the 5, but other people use 2 and 7. Some people, including myself, and I was showing Daniel this. A lot of times I will just split the baby and I'll trade the 3-minute just flat out. Just trade the 3-minute, just split it. We have other members that I just to show you the capacity here. We have other members that say, time isn't very good, or not very good, but they say it's relative, and I don't think it doesn't carry that much meaning. I think it'd be better to use ticks. And so then we could come in as an example, and we could set this just the ES, and we could use ticks, and we could use 800, or we could use Fibonacci. We could use 615. Pick a Fibonacci number. I don't know if it has any meaning, but they might use 615. Now, what this means is it's a transaction, but there could be 100 contracts in that transaction. So now watch what happens. It takes a minute to populate. So now the candle isn't 1 minute. It's a 615 transactions. Oh, maybe that's more meaningful, right? Maybe, I don't know. I mean, the crazy thing here is this. I'm just going to tell you, this is what, and we have so much that fills my days, and I love doing this shit, right? I love doing it. Um, but we have so many members now, and they're doing so many different things with the same tools. There are things that they're doing that I've never thought to do. Um, and it just keeps coming. Um, so what they would do here is, well, if that's going to be the shorter time frame, what might be the larger trend? Well, maybe we multiply that by 5, maybe. That's 1 minute, that's 5. So what would be 5 times 615 would be what? 3,000 ticks, but might as well get the exact number. You guys probably already know what it is. Um, let's see here. Calculator, 615 times 5. 3,075. All right, so let's go do this. Let's go look. And then we could do this. It's crazy. No. Ticks. No, I want, I get it. I'm in the wrong place. My thing is in the way. I can't. Maybe, can I do it up here? You know what? No, I don't want to do it here. See, I can't see the customize. So I got to gauge where that thing is. I can't, because we just dressed the screen up. Let me see if I can guess where it is. Customize. Okay, I guess right. I think. No, I didn't. Yeah, there. All right, so we'll put in 3,000, 3,015 ticks. Those are trends. Oh, I changed them all. Damn it. All right. I changed them all. Shit. I'm sorry. I guessed wrong. I guess I hit all symbols. There was a chance of that. So let me just go back, and then it'll be easy for me to change them. But damn it. Yeah, so it's like it was right here. So we'll just do this example. Then I got to put them back. But 615. Sorry. So here you can see the ES 3,000 tick candle actually went long 6 ago. All right. So now I got to put them all back though, because it's just too noisy, and it may be way too slow, like on gold or on oil. It might be. Once again, if you started to go down the road on something like that, you could take the program, put it on a tick chart, and then go in and look historically to see if that would be a good way to go. And we definitely have folks doing it. In fact, a lot of them like 800 ticks. All right, so now what I got to do is I've got to change these all. So I'm going to put them all back to a 5-minute. All symbols, it's this easy. And we go here to 5-minute, and we change them all back to a 5-minute. And then I've got to go in here and just do this. I'm going to put them all back. 1 minute. And that's all. It's that easy. Now the program, by the way, that put that money in the account was a program that we ran on Point and Figure. This is a price chart. These are time. This is time. So then when you start using this in conjunction with time charts, then it gets really interesting. And they just don't have a chance against you. They just don't. Okay, so remember I said here's the ES, right? So the 5-minute was short, and it stayed short. Now here, that little counter trend, it went away. It just dissipated, right? It dissipated. But now it's short, and it's in the direction of the 5. Please don't take these trades, right? I don't want anyone to lose any money here. We're just, this is an educational view, right? But the likelihood is that it will resume the trend, right? She's suffering a little bit of a draw, middle of the day, but we'll see. We'll see how it plays out. Be very careful here. We do, during Q School, we do get this tool on your desktop, and we set up some drills for you to practice, and before we just don't say, hey, just here it is, and just just go. We want you to drill and to practice. So be careful, right? We're just showing you what's possible and give you a chance to watch. This This is a Renko chart on the ES. Oh, shoot. No, I got to get that refreshed. I'm sorry. So we're not going to be able to see it. I'm sorry. Okay. Thank you, DT. Thank you, everybody. We're going to let you watch. I've got to just return a couple of calls. I'll be nearby. And just be careful here. It's middle of the day. Again, we're not suggesting anybody take specific trades here or anything to try to. It's just meant to answer some questions, show you what's possible, and invite you to visit the site. You can email us. The Q schools do book up, and if you know the time when you want to start, we can certainly do that. We can schedule it, and then we can. So, what type of trade is this on the 1 minute? Um, it is a counter to the 5. Can you make a little bit of money? Yep, but you got to be very adept, because the likelihood is that it will fail. This one struggling here a little, but now you're watching this with a very critical eye, as you should. I should address this too. The program is hard programmed, hard coded. On very, very fast days like this, or very volatile day, and we explain the rotation, the logic behind the program, not just this column, but also what's going on over here. But if you're watching with a very critical eye, you may see what appears to be a glitch. It isn't. What the only thing I can describe is it's like the sprocket on your bicycle. The logic behind it and the coding is a circular routine. If the market moves so fast, so quick, that people start throwing lots of market orders in there on the 1 minute, it's possible that the program could appear to like skip a beat, or get. It doesn't happen that often, but during really fast, chaotic days, it could. It could. It's less apt to do it on a larger time frame, like 5 minute, and very unlikely to do it, on anything larger. But at a 1 minute level, and the only way I can describe it, it would be like when you're a kid and you miss the sprocket, it's like boom. Um, so other things that we can do, we can trade. For those of you that value the VIX, it seems like a lot of people are just discovering the VIX. Like we've been using the VIX for years. Um, we have programs that can trade the ES based on what the VIX is doing. Mhm. So the VIX is long, then we only take shorts. The VIX is short, then we only take longs. And it can do it robotically. And if it can do it robotically, then we can measure it and see how that approach is doing. And maybe the VIX shouldn't be at a 5 minute, maybe it should be at a 10 minute. And maybe the ES should be at a particular minute. So then you begin to refine. And all these questions that you have, even about your own trading today, you might have a very good approach. And if you want to share us with that approach, if you can write it out, by the way, if you can write it out in English, and we will try to program it. For annual members, we don't charge. And it has just a couple of caveats. One, if we can do it. We haven't run into anything yet that we can't do. Two, technically possible within the constraints of TradeStation. There's some things that they just can't do, and still some things that we can do, probably that they don't realize we can do. But it's got to be that. And then thirdly, when you do that, when you ask us as an annual member, I don't have a deadline. So Don doesn't have deadlines. However, if it's something really, really intriguing, I'm going to want to do it. And so we don't charge you to do it. What we'll do is we'll write the program. in a beta form. We'll back test it, forward test it. We'll maybe offer some suggestions, and then we'll give it back to you. It'll be encrypted. It will be, because our coding is our coding, but it will be encrypted, and you get to run with it. Now, we also have a group of members that have told us that they have the time and the interest that they want to see the beta programs that come out. So we just tell everybody, go slow. It's beta. It is what it is. Something may live in beta for weeks or months. If it passes muster, then we'll lose the moniker of beta. It'll become a program. It'll be our program. It'll go into the library for the benefit of everyone, but you'll also benefit, but you didn't have to pay to have that done. So we don't and we don't sublease out, our programming skill or anything. We don't, but and we've never had to, knock on wood, ever had to go to anybody. They're very, very good, but it's expensive. It would be very expensive. I mean, they get upwards of $200 to $300 an hour, programmers, and in a minimum usually of 4 hours of work. But again, for an annual, we don't do it. I mean, we don't charge. We just do it. And so that's where a lot of things. So I've been asked from other members like, Don, why do you keep producing? Well, because people keep asking for stuff. So it's just not going to stop. We don't throw anything away. And there may be programs that you're doing even on your own, and the market changes and they fall out of favor. Don't necessarily abandon them, because they might come back into favor. Makes sense? In fact, I want to go look. Now, we didn't run the program that produced this today. Let me go see what it did. So I have it on a chart. It's not going in, it's not running, but I can see what it, let's see, I hope I do. I think I do. Let's see if it's there. No, I'm sorry, I can't. What can happen is we didn't let our computers cool off, and so I've lost some of my tick charts. And it's good practice to shut your computers down at least once a day and let them reboot. But I didn't do that. Yeah, shoot. Okay, I'm going to shut up and let you watch. I've said that about 3 times, so I'm going to be quiet. Any questions, you let us know. Okay, so we'll just offer a little commentary here. Let me mark things up here a little bit. Let's go get our annotation tool. Oops, there it is here. Let me go get a marker. Hope everyone's okay, right? Again, this is for educational purposes. We're not suggesting anybody do anything with their money, right? You can do it on paper if you want. All right. So here, let's look at the VIX on a 5 minute. The VIX is dipping on a 5 minute basis, right? Um, which means you have to kind of turn your head around on this, but a VIX that is trending up means that the options market is spooked, basically, right? So when the VIX is trending up, the S&P is generally trending down, generally. Um, and we do think it's the options market that is driving the price action of everything every day. It's highly, highly leveraged, highly, highly popular in the States, around the world. So it's dipping. So that might mean that on the 5 minute, the short that's signaled back here at 11:30 and the head run up is now doing what? It's ripping. It's coming back up. And we see it on the 1 minute here, right? The 1 minute. Now, 26 minutes ago, we did see this, right? And I said to everybody, be careful with that. Why? It is a counter trend. It is a counter to the 5. This amount of money on a counter trend on the ES is a very good trade, right? Usually on the counter trades, 3, 4, $500, something like that. So, we know that historically. But now notice what the VIX is now doing. The VIX is now trying, it's still long, but it's saying, hey, look at me. I'm trying to go short here. If this stays true, it needs another 5 minutes. This box will turn completely red. This box will have a red 2 in here and it'll be white. That's the trigger. That is the trigger. And that means then it's not there yet. So you don't want to get ahead of it. That the VIX is turning down, and it means the markets are getting a little bit more comfortable being on the long side. This one here is a counter trend. This is ripping. What is entirely possible is that this counter trend becomes a 5 minute trend. If the 5 minute continues to come up, this will say long entry, white, and hey, look at me. The short is failing. I'm trying to go long, and then it'll turn. If it does go long, it would turn completely green, and then there'll be a number 2 in here, shrouded in white. These numbers here are the signal agent bars. It's just shorthand, so we don't have to look at the time. So I don't have to come over here, look at time, look at time. I just want to know. So that's where we be. It's a middle of the day though here, and so we see this little counter trend, but it could be building for a little afternoon rally in here. We see the same thing is happening here. This is the NQ started out 30 minutes ago, a counter trend, $1,800. A micro would have been 190. Nothing wrong with that. 200. This is the way that I think about trends. We've shared this with others, but I'll share it with you again at the risk of repeating myself. Every hurricane that hits Florida, unfortunately, we had our share. I probably should have come up with a different analogy, but we'll stay with the hurricane. Every hurricane that hits Florida starts with a little butterfly in the Sahara Desert. That little butterfly, he bends over and he farts, and he kicks up a little bit of sand. And then that sand gets in the wind and grows and grows, and it becomes a little thunderstorm, and then it gets off the Cape Verde Islands, and it becomes a bigger thunderstorm, and then that bitch grows and grows and grows and comes across the warm waters, across the Atlantic, and then hits us in Florida. started with a butterfly fart. Every hurricane, every hurricane that hits Florida starts that way. However, sometimes that little butterfly in the Sahara Desert bends over and farts. And he just kicks up a little dust and nothing happens. Just a little bit of dust. Trends are hurricanes. We like to get on the back of that hurricane and ride it. Counter trends are butterfly farts. They're butterfly farts. They happen a lot. And the seduction is that when you put on a counter trend and you just happen to catch one of those times when that little counter trend became a hurricane and you remember it because you made a lot of money on it. And then you come back and you do the same thing over and over again and they just dissipate away. Dissipate. So that's where the counter trends are seductive because they're frequent. They um, they have a high winning percentage. They usually don't pay a lot, and you need to in your winning percentage is like 70 to 80% of the time, and they pay a little bit of money. You got to be really active. You got to be really disciplined, and in our view, really machined. And I like doing them. I do like doing them. I have to. I had to. We joke. We have a member, Chris, in Jacksonville, and we kind of joke because I like to do them. But you don't want to be doing them all the time, in my view. And now the trends to get on the back of the hurricane is because sometimes it dissipates. It doesn't become the full blown hurricane, or it doesn't, and you remember that, boy, I remember that I had that one, you know. Well, for instance, Daniel, he got himself on the back of a hurricane last Monday, and he made 20 grand, you know. But you're not going to do that every day. You're not going to have that type of market hurricane, every day. So you've got to know what it is, and you get on the back of it, and you're like, beautiful, I'm on the back of it. But so to get on the trends do pay more money, no question about, on a relative basis, whether it be a 1 minute, 5 minute, daily, they definitely pay more money than counter trends. But they don't win as much. In fact, the win rate is usually 30 to 50% of the time. 30 to 50. So you need to know that in advance, because psychologically, if you're not aware of that, you'll be like, wait, shit, man. I did that 5 minute trying to get on that 5 minute trend and I lost 5 out of 10 times. Yeah, you could. It's possible you could. We got some tricks to try to reduce that, but you could. But when you get on it, you're on it. I mean, but the thing of it is, you got to stay on it. You got to stay on it to get that, to get that payout. So thank you, Frederick. Appreciate the feedback. Frederick, he likes that analogy. So you have to know going in that that you might lose 5 to 7 out of 10 times, trying to get on the trend. Yet everyone says, by the way, take a look. Please don't trade these, but notice the VIX is going short here on the 5, and notice the 5 minute NQ is going long right now on the 5 minute. Now if you're making the decision based on the money, you may have a hard time, because especially if you're trading a mini, this thing could oscillate $300-400 on either side, maybe $500. It could. You're not obligated, so you can't be focused on the money. So what you do is you reduce your leverage down to a level that you can handle. The smallest you can go is a micro. So instead of being down $95 or $100, you'd only be down 10. So if that's what you have to do to learn, that's what you do. And we would ideally, stay in this unless the 1 minute was to come out. So you have to, learn, right? But I can't, please don't do this out there in YouTube land, right? I put on a mini. Don't do this. You have to learn. Okay, please, I'm begging you. All right. You work way too hard for your money. Don't give it into the market. This is not an Indian casino. It isn't. This is a skill set. Right. So I'm just kind of pointing out some ideas and some concepts about the notion of trend and counter trend. Um, where else was I going to go with that? And the other thing about trends is they're not as frequent, right? So for instance, here, let me show you what we can do. Like we hide a couple of columns in here so that we can fit everything on the screen. But what do you think about the smoothed hike in Aussie to remain with the trend? Hey, Wilson. Um, it's okay. It's basically just a moving average, right? Heiken Aussie is just a moving average. And then there's a calculation around the candles that are trying to identify the trend. Um, they're okay, you know, we don't use them. So, but they're just okay. I think you can do much better. Um, Let me come here and come here to edit. And I'm going to, like, we've got a couple of things hidden here, not to hide, but just to, let's see. No, what did I just do? Let's see. No, I'm in the wrong place. Let me do this again. Data. So, no. Oh, yeah. Hide plots. So we have some additional plots. So for instance, long trades, add, short trades, add. So we hide this column just to save room, not to hide it, to hide it. So and it's set as a timer. Let me show you. There's a timer in here. And here it is, timer for the trade count. And I have it set at 0400 and I have it ending at 1600. So, and you can set the timer. So you want to know how many 1 minute trades have there been since 4 this morning? 6 and 6. That's how many opportunities you've had. Just 6. On the 5 minute, it was just the one short, just one. The NQ, 7 and 5. It's usually separated by 1. So I'm not really sure why that's split like that. It's usually separated by 1. So you can see you get many less opportunities with the larger time frames than you will with a smaller time frame. The point being, when you're getting on the trends, not only are they going to be fewer. Let me just go back here. I'll just bring this back. I'm going to make some room here. So these are just our plots. Remove. And remove. We'll hit OK. So you want to know as much as you can what to expect, right? So like even Wilson Bates is asking us, Wilson, he's got a question about Heiken Aussie. The problem is that whatever you do something like this, if it's not programmable, we're not going to know, right? So what we would do is we would write a code, and we have code around Heiken Aussie, right? Because we've already done this, but we'll write a code for Heiken Aussie, and then we will plug it in and see what it would have done over the last 5 weeks, usually last 1 to 2 months, usually 5 weeks, and then see. And before we commit our time and our capital to doing something. I want to see it in advance. Now, that's hard to do with options. By the way, while we're talking about trends too, and I wanted to mention this, um, option trading for us, anyways, for us, I think for most, other folks that trade a lot of options, they're counter trending. We're not looking to get on the trend with options. We're not. We're counter trending. We're getting them. And on this side of the ball too, I don't even want to show you on YouTube because I don't want anybody doing it right now, but because you're on delay and it's got to be really precise. But we can use this tool for counter trending, but I don't even want to explain how, because I don't really want to have folks trying to do it. Because you're on delay and you've got to be really, really precise, and we can actually program it and whatnot too. So I don't want anyone. The other piece of what we're about, I'll go ahead because it looks like we have some new folks. So let me explain. And while I do this, and by the way, um, we have been doing this a long time, right? So if you found us, it's a small miracle. We haven't been doing this for 6 months or 6 years. Susan and I taught surgeons how to do surgery for 25 years. Susan worked for Lotus Software, CBT Systems, and IBM. Um, and in the early 2000s, we started doing this, and for ourselves. Great way to go. In 2012, when Twitter came out of the ground, we had the idea of Stock Market Caddy. We didn't start out with Stock Market Caddy. It was not even a consideration. We were doing it purely for ourselves. Never thought, which is kind of cool because we also, and you can see that you literally can see this market turning down, right? Here. So what we're trying to do, this is the way we think about it. Everybody starts, I'm going to down here. Many of you have seen this. Tina probably ad nauseum has seen this, but again, for folks that are coming by, like, what is this guy doing here? Everyone starts trading in this box. What is that box? Discretionary trading. They're trading, and we did too, right? So I'm not saying, I've also gone through this evolution. It's an evolution, right? Um, when when you're discretionary trading, you are trading what you see, what you hear, what you think. And there's a whole bunch of different skill sets around that. And it's important to have those skill sets. It is important. But what we see happening is a person may pick off 10, 15 discretionary trades in a year and do very well. And then what happens is the person says, honey, I'm going to quit that boring job and I'm going to start trading intraday every day, and that's what I'm going to do. And suddenly they don't do so well. They don't. Because it's a different animal. What they may have been doing with discretionary trading, over the long haul does not equate to what they're doing intraday. And the truth of the matter is they may not have had even that much game anyways. So what they end up doing then they start looking for they struggle. They start looking for a guru, somebody to follow. I'm not a guru. I'm not going to give you the trades. I'm not going to do that. I'm going to do something much more valuable, but we're not going to give you the trades. And I don't present to be a guru. We'll leave that to the Tom Sosnoffs of the world. And nice. He's a nice enough guy, but whatever. We're not. But folks will start looking for that person, and then they start trading what that person sees, what that person hears, what that person does, and then it might turn out well for a while, and then it usually doesn't. And folks kind of live and die in this box. They either succeed or they don't, and they never know what else they could have done. What we try to do in the Q School is to expose them to what we call mechanical trading. Mechanical. And Swing Machine is just one, right? So this isn't the only tool. But when we start here, we start with this one. And for those that haven't seen, this is the score sheet of Daniel last week, his first week at Q School. This is what he did. Trading just Swing Machine. Mechanically, not robotically, mechanically. His week, he did 32,000 and a profit factor at 10.22. Right? But this is his thing. You can go back and hold it if you want. As an example, it's exceptional though. Exceptional, which is great. When you're trading mechanically, it'll look and feel mechanical, but you are following a machine presenting trade opportunities. And they could be any number of things. Things that go well beyond moving averages, Heikin Ashi, not to pick on it, well beyond Fibonacci's, well beyond stochastics and MACDs, all the shit that is stuffed into these libraries on your brokerages. There's much more available. The reason why we went to TradeStation is they had a programming language where we could program our own original code. And we can do so much more. Person needs to learn. You need to have good discretionary skills. So we will help you here because we're very good at this. We are. We had done it, from early 80s, right? I'm older guy, early 80s to the early 2000s. So we've got some experience doing that. And we can share with you that. It's great for investing. Investing for us is buying a stock for that's going to be more than a year. That's an investment. Usually it's going to be a few years. But mechanically trading, it's different. It's going to be like, the car is going to drive itself and you have to learn, well, it's going to present opportunities, not quite yet driving itself, but we work on this. Then when you become really good at following the machine, we then begin to move a person into the next box. What box is that, Don? That is robotic trading. What does that mean? Well, that means that, yes, you could have traded the 1 minute in the direction of the 5 and thus, and done that mechanically, but we can actually get the computer to do it. Literally put the trades in and out. There are some brokerages that are never going to allow you to do that. They're just never going to do it. And that ain't going to happen. They're not going to let you do it. They're going to be doing seminars on candles and seminars on this and that and shit, but they're not going to let you do it. Robotic. And then the last box, the bigger box, where you ultimately don't have to go, but you'll spend the rest of your life exploring ideas and doing this. And that is where the hedge funds run or live, is robotic hedging. Robotic hedging. And you can be running multiple markets against multiple time frames. I'm going to show you something on the dollar and the euro that is absolutely going to make you puke. So I hope you stay with me on it. I do want to show you this because it's ridiculous. Ridiculously good. We're going to try to get you to move in this direction. However, what's really important to understand is this. You can't jump the shark. You can't be a shitty discretionary trader and a really good robotic trader. So if you're watching this and you don't have really good discretionary skills and you haven't demonstrated that to yourself yet, you will still struggle. We can help you here, and you will need to practice this because you can go back and forth, but there's no jumping the shark. So you got to first hone this, which we can do in a shorter period of time. It doesn't take months. really, it doesn't, because when we're trading intraday or the smaller time frames, you're going to get a lot of feedback. But then we're going to move you into the mechanical realm. You can go back and forth, but then we're also going to start moving you toward robotic trading. And what's really nice about the robotic trading, bear with me a minute. Okay. Sorry about that. I didn't I didn't fall down. Um, so robotically, the machine, though, there's no jumping the shark, but the machine can be putting trades in and out. And the other neat thing is, as an example, let's say that 12 minutes ago, the machine went short the ES, and you see your account up $250, and you see something else on your screen. It might even be Heikenasi. I don't mind. I'm not, we're not threatened by any of that stuff. I mean, if you got something that's helping you, or a Fibonacci, and it's helping you get done with, no problem. No problem at all. We would just like to be able to help you program some stuff. Um, but if you choose to go in and take your money, if that's what you want to do, you can do that mechanically. You can do that, right? Now, we want you keeping track of what the machine is doing, and we want you keeping track of what you're doing. We also want you keeping track of that profit factor, right? So if there's anybody here that doesn't know what a profit factor is, and you're following someone who's giving you trades, we're not giving you trades, right? I'm not managing anyone's money. I'm not giving you trades, but I am encouraging you, whatever it is you're doing, whoever it is you might be following, whatever it is you've learned, whether it be Fibonacci's, whether it be Heikenasi's, and I'm not picking on you guys at all, I'm not. If you are trading options with the Tasty crowd, please, please track your profit factor. That will tell you what you, one, are you learning anything, and are you trading as a business? And if they're not encouraging you, or you've never heard what that is, let me know. Happy to explain it. I don't want to go here now, but I could. But it's critically important. It's critically important because it keeps track of the internals of your trading game. For instance, you know, if you don't know in golf how many greens you're hitting, how many sand saves, how many fairways, then you don't know what to work on, and you're not going to improve. You know, you're going to be one of those guys like, last week I was really hitting the ball well there, Jerry. But this week I suck. Not that I'm playing with you. You don't want to be that guy. You want to have, you want to have command of your game, and you want to have command here. You need to track that profit factor. And if you don't know what it is, one, you don't know what it is, or you don't know what yours is, then you are wasting time. I'm sorry, and time is so valuable, kids. It just is. It's extremely valuable. This is robotic. What is this? This is robotic hedging. I'm going to show you a robotic hedge here in a minute. This is going to make you puke. As an example, and we can do this robotically. What is a hedge? When you can be both long and short something at the same time. Maybe the same market, maybe opposing markets. Option traders do this all the time with spreads. Why do they do that? Reduces costs. But the biggest reason why we do it, it reduces the volatility in our account. It gets your equity curve up off the ground and advancing smoothly. We don't want the plane oscillating, I made $5,000 last week. How you doing this week? I'm down $12,000. We don't want that. You don't want that. We can't have that, right? Not if we're going to be trading as a business. This is what we're trying to expose you to. And it takes 3+ weeks during the Q School. I want to spend 1 to 2 hours with you a day, but that's it. The rest of the time, I want you, dedicated to doing what you're doing. We will work around one schedule. Let me know in advance if you got demands on your time. We can open things up so you can have access to the videos in advance. And then when we block off the time, and then, if we know in advance, we can schedule. And I'm flexible. I will schedule with folks. So we say 3+ weeks, but for some it might be a little longer, but it's usually that thereabouts. That makes sense, I hope. All right, so this is what I want to show you. This is really cool. Everybody's all excited about crypto, right? Oh man, Bitcoin's going to $300,000. It's going. Oh, Michael Saylor, I'm going to be buying. He's telling Tucker Carlson. You see those memes? I'm going to be buying Bitcoin when it's $1 million a coin. I'm going to tell you something, guys. That guy makes the little hairs on the back of my neck stand up. I mean, I don't know about you, but I don't know. I don't get it. I mean, I think I do get it. And he's got a history of blowing up another company. He's very successful. He's made a ton of money, but boy, I don't know. I don't, we don't preach any one thing. We're not saying that you should do this, that you shouldn't do this. We're not. It's entirely up to you. We're not. I just, there's some aspects of this whole Wall Street thing that make my skin crawl, and especially the crypto crowd now. Okay, and so if you're a big advocate of crypto, okay, but learn how to hedge. And I want to show you something. If you are piling in your IRA account, God forbid, into crypto, thinking it's going $1 million a coin. Now, it very well might, but it might not either, right? And I'd hate to, see that happen. But I want to show you. I'm going to come in here and I'm going to put in the dollar. Now, this is going to happen to be on a delayed contract here, so we wouldn't be trading it on this particular account. We don't have the dollar feed, and we got multiple accounts, multiple things, but we're not going to trade it intraday anyways. I'm going to put this on a daily basis. Okay. This is the dollar contract, futures contract, a dollar contract. It went short 48 days ago. 48 days ago. Those of you that trade futures know how much margin that requires. How much? To go overnight, approximately $2,000. Now you want to have a little bit more than that, 3,000-4,000, but at $2,000 to get into the contract. That's about the original margin. In 48 days, it went short at 106.25. If you closed it, you would have $6,680 in profit. What's the percentage return on that? Right. Huge. 3 times. 300%. Now, what about the euro at EC? Because the dollar, the currencies their value is recognized in comparison to something else, right? Like another currency. The other biggest currency is the euro. So let's look at the euro. And this does this repeatedly. We have folks that are in Europe now. The Europeans get this because they understand. They had a time when they had a whole bunch of currencies, right? And they would cross borders, and they would have to, there were Americans aren't right. It sickens me that I digress for one moment. Do you remember when Ben Bernanke, the central banker here who launched QE in 0809, and he was interviewed by Scott Pelley on 60 Minutes, that pompous windbag, and he's got his glasses and he's chewing on the side of his pen, and he says, Dr. Bernanke, you're going to be doing quantitative easing, and many people say, Dr. Bernanke, that that this is going to bring on inflation, that you're going to devalue the dollar. What do you say to that? And he says, that's ridiculous. What are you talking about? A dollar is, he says this, there's a video of it on 60 Minutes, no less, the big Sunday bullshit propaganda show on Sundays. And he says, a dollar is a dollar. That's ridiculous. Now, if you happen to be going to Paris, where most Americans aren't, going to Europe on a European vacation. But if you're going to Paris and you're having a lunch, in the streets of Paris in a cafe, and you order a French bottle of wine, then yeah, that bottle of wine might go up. But for you here in America, no, a dollar is a dollar. Ah, I mean, it happened. They said it. What bullshit, right? I mean, Jesus. When he said it, I'm like, Susie, can you believe it? This was in 2009, 2010. Yeah, where's Ben Bernanke now? Ben Bernanke launched QE. Ben Bernanke's living in Tennessee. He's probably short the American dollar. He's fly fishing and having a grand old time and laughing his ass off. In the meantime, people can't afford eggs, can't afford this, can't afford that, right? So I digress. We can't save the world, not out to save the world. You're not out to save the world. You're out to save what you've earned and make money from money. That's it. Look at the euro. The euro goes along. Now, usually this signal is within a day of each other. The euro goes long 36 days. How much capital did it take to get short the euro? 3,500 bucks, thereabouts. And it's up nearly in 36, 9 grand. What's that? Nearly 300%. So to go short the dollar and to go long the euro would have taken an original margin about 5,500 bucks. That's how much money you would have had to have in your account. How much you got here? Will you give me 9 and 6, about 15,000? How long are you going to wait for this to go to 300,000? You going to go to Miami and sip Cosmos with the Cosmo girls, and and all the hoi polloi, and sit and pay $5,000 for some Bitcoin conference and God knows where, and have a bunch of panel and Michael Saylor up there and talk about how Bitcoin this and Bitcoin that, and you're going to be in a conference room with 10,000 people, and we're all going to get rich, on crypto. You can get rich on bubbles. And again, I'm not saying that Bitcoin is or isn't going to a million. It don't matter. My only thing would be is if you had wanted to hodl Bitcoin, rest assured, Michael Saylor, he's not going to tell you this. He isn't. He doesn't give a shit if it goes to zero. Why? He's got it hedged. He's in the futures market and he has pros hedging his portfolio. So if Bitcoin goes down, he's not going to lose. He's got it hedged. And but This swing machine back here is a wonderful tool for hedging, pairs trading, whether you're using futures, whether you're using options, whether you're trading currencies, whether you're trading stocks, or even if you're trading Bitcoin. You would do a lot better to learn how to trade than to be listening to all these young kids, many of them very well educated. I mean, they got a better education than me. They're graduates of Stanford and God knows Yale, the Yale hockey team. What do I got? I went to a state college. But you got to remember something when it all comes to this. Don't I'm not impressed. I am not impressed. I Let me put it this way. Um, I don't equate brains with wealth, money. I don't. I learned that a long time ago. I know a lot of rich people that are as dumb as a box of rocks. Um, so I don't equate money to brains. I also don't equate degrees with brains either. Kids, I never had a biology class. I got a college degree in political science and a pre-law focus. Um, thank God I didn't go that direction. But and I never had a biology class. And in high school, I was looking forward to the biology class, and the biology teacher grabbed me and three or four other guys and said, "Hey, look, guys, you see all those kids out there with the Bunsen burners? They're going to be doctors and nurses and everything else, and I can't have you guys disturbing me. Here are the keys to my car. Go to the junior high, get some wood, build me a bookshelf back here for the next 3 months. And if you build me a nice bookshelf and don't bother the girls on the Bunsen burners and stuff and pigging, or the dissecting the frogs, I'll give you a B." I looked at him like, "Are you kidding me? I was really looking forward to dissecting the frog." It's like, "Don, come on." Yeah, come on. I'm like, "I was looking forward to it, Mr. Nichols." So that's what we did. He literally did that. And I got a B, and I never had a biology class. I called the guy back. He was a great teacher, by the way. And I was a city kid from Boston. You never know in life. And he gave us a chance to raise some money, and he took us, a group of us, a big class, to Florida. I had never been on a plane before. And then guess what? You know, meet Susie. I'm like, "We're going to Florida, kid." But so you never know. But I ended up calling Mr. Nichols back about 10 years. And I talked to him. I said, "Mr. Nichols, how are you?" He said, "Oh, great, Don. Good to hear your voice. What are you doing, Don?" I said, "Mr. Nichols, you'll never guess." "Let me guess. Let me guess. You're a fireman. You're a lawyer. Nothing wrong with firemen. You're a policeman." My dad was a policeman. "No, no." He goes, "What are you doing, Don?" "I'm teaching surgeons how to do surgery with the most advanced instruments of the day." "What? What? What? You, what?" Yeah. I mean, he damn near fell out of his chair. And I was trained by companies, right? They basically paid for my med school. Um, don't sell yourself short. You're not too young. You're not too old. You don't this the background to trade. You probably don't want to listen to the people on Wall Street. You probably don't want to listen to the Madison Avenue people. You probably don't want the subscription to that shit. You probably don't. What you want is an opportunity to learn it for yourself and to do it yourself. And we will do everything we can to do that. And I think you should be skeptical. I'm a very skeptical person. I think that you should be. Um, I think it's a sign of a critical mind, and you just see what you can do, and then you got to go from there. And the biggest thing is, I just say, it's just go small. I tell you the story because um, I hope it's inspiring to you. I hope, it's a great, it can be a great way to go. It's a great life. It's very independent. No more, no more bosses. Haven't had any bosses. Um, no more conference calls, no more travel, no more the, corporate bullshit. And it was fun. I mean, I did enjoy it though. I had good bosses. I did. I had a couple of duds, but and I really did enjoy, the surgery aspects of things, which is another story in and of itself. Um, but I always paid attention to the markets around it. So we talked about trends, trend follow long, trend follow short, counter trends. We talk about discretionary trading, mechanical, robot hedging in broad strokes. This is just one tool. I'm going to erase that. It's just one. We have now, at last count, about 65 to 70 proprietary tools. And last night I was up until midnight working on new tools. We have pages of ideas, of concepts. We love these radars. Um, also, we did a video. Let me show you. Go to our YouTube channel and go to January. I think it was January 27th, maybe 29th. And we have a video there called Brace for Impact. Brace for Impact. Let me show you something. And then we'll end with this. Oops. Let me put this in. $ SKEW.X. And I'm going to put this on a daily. This is the skew of the S&P. Let me do this too. I'm going to lose the dollar here if you don't mind. I'm going to put the SPX in here, which is the S&P cash.x. And I'm going to lose the euro here. Oops. What did I do there? I got that wrong. I must have $SPX.x. There it is. All right. So that's the S&P cash trading at 53.93. And we're going to go here and put the VIX on a daily. Now, this was so ridiculously easy, but it doesn't come up very often. But if you go back to the video, you'll hear us describe it. And we said brace for impact. And we showed everybody the video. We certainly showed our members, and some of them hit it huge, huge. Back in January, where was the S&P? Let me show you. And the video shows you. The S&P was trading here. In euphoria. Now, everybody was bullish, right? Everybody. It was like, just like gold. Everybody. When everybody is on one side of the boat, you probably want to be thinking about going the other way. But everybody was bullish. Also, the VIX was here in panic. The VIX was down to like 13, 14. Very, on a daily basis, extremely low. The fear gauge. Because the market, everybody was bullish. Buy anything and everything. Don't buy any protection. Don't buy any puts. But then the skew. The skew. Now, we don't have enough time to explain skew, but it tells us how they were positioned. And they can't rig these two numbers. Where was the skew? The skew was up here. Oops. I'm going to make it red. The skew was way up here. In fact, the skew is now at 125. Normal is 120 to 130. So Bessent and Trump are pretty happy with this. They may leave it here for a while. They're pretty happy. Um, where was the skew back in January? Up here. When everyone was bullish and nobody was fearful, the skew had the highest reading I had ever seen. It was at 182. There's only one way for the skew to get that high. The billionaires who own the shares have to be doing what? They have to be selling calls to the speculators and buying puts in a massive, massive way. Do you remember the stories about Buffett? He was raising the cash. That's what he was doing. That was the time to short the market. Where was the market? It was at 6100, 6150. If you had bought a put just to March, and we said beware in the video, I think we said beware the Ides of March. If you had bought a put, it would have cost you at that time about for March, late March, about 6 grand. Toward the middle of March, the thing would have been worth about 60 grand. It's how we can use this, even this aspect of the tool on a daily. And you can also know when, and we're right now in the middle. We also knew when when the market was in panic sell and the VIX was up here just the other day and the skew was coming in, that we had to go the other way and get on our calls. So we nailed them both ways to Sunday. We're not winging it. And I'm not subscribing, to quad one, quad two. And I like to listen to Peter Schiff because I like him, but for anything economics, I think he's the brightest guy around for that. But I just don't, trade off of that. But as a further example, just from this tool alone, but again, we got dozens of tools. But you'd have to be comfortable, you'd have to know how to use it, which is what we want to teach you. And then when the opportunity presents itself, and it could take days, it may not happen again. We may sell off again, and it could be a huge buy, but it may come in June or July. But you only got to, I mean, if you have a few of those puts, I mean, you do that a few times a year, you could be done. I mean, you have to go find something else to do with your time. Folks, I didn't expect to talk this long. Thanks for the feedback on the image. We will let you watch here, and I'm not going to turn the program on because I have to be in and out, but we are going to let you watch. And the next time we patch up, I'm going to be using a different streaming tool, and I think we can get the image better. So I'm bound and determined to get a better image going out to whether it be YouTube or Rumble or wherever. And then also I want to hopefully have the capacity to plug some of these live views into our members website. We're not doing that yet, but we would maybe like to be able to do that sort of thing. Again, thanks. And we'll let you watch. Frank, thank you. Thank you. I thank everybody. Thank you. And, you know, visit the site, think about it, think about what you've been doing, think about what you want to do. Um, and I'm happy to chat with anybody. 9 a.m. to 9 p.m. Again, we've been doing it a long time. Um, it really should be fun. This trading should be fun. It should be a blast. And I'm going to tell you right now. By the way, normal VIX is 18 to 22. And what that means is basically the S&P can move 1% at any time, 18 to 22. That's nirvana. When it gets more difficult is when the VIX is down at 13, 15. And then we're looking at, half a percent, which is fine. And but I don't want to see the VIX living up here at 25 is great too, but now it's 2%. When it gets to 30, it's 3%, and it gets over 30, then it can get almost like last Monday. I think it was last Monday. We really throttled back because the markets were becoming unstable. I don't want unstable markets. You might want them that way. I know as sometimes retail traders, but we don't. We want them liquid. We want them stable, orderly, and we don't care how high or how low they go because we're just gonna, we're traders. But thanks again. We're gonna let you watch, and feel free to reach out. Okay, everyone. We're going to say thank you. Thank you. Hope you enjoyed the watch. Again, there's so much more to this, right? It isn't, members are not, they do have eyes on Swing Machine, right? But they're also doing so much more. So I just want to remind everybody it's more than just this view. This is just a view. And but do you remember this was at 11:30? We all watched this one go off. It had a nice little run up. It ran back against it, but it's up 1400 on the 5 minute. And any case, we will try to punch back up. We're experimenting, so we're going to probably use a different streaming service the next time we punch up, which could be tonight, because I'm really eager to find out and get everyone's thoughts and opinions on the image quality. And so until next time, we're going to let everybody go. I'll just check if there's any last questions. Let us know. And I'll wait a minute or two because we're on a little bit of a delay. But again, this was the 11:30 trade, and it ripped against it, right? So it's not up as much. And this is 225. And okay, it doesn't look like there are any questions. So we're going to, people keep coming in. Markets are closed right now, so we'll try to punch up a little bit later with a different service. We've been trying a couple of them. We're trying to find out which one is the best image quality. And even though we've been doing this for so long, I had been using Zoom and didn't realize how crappy the broadcast was in terms of image quality. I should have known, but I can't say that I did. So we're trying to improve on it. All right. We'll be back a little bit later. If you push the like and the like buttons help us, the notification button will help you. So when and if we do, well, when we do punch back up, you'll know. You'll get an email alert. All right. Where did Tesla finish? Tesla looks like it finishes the day at right around 250, right? So she closed yesterday at 238, and our expected move radar said that Tesla would be up or down about 9 points, and so pretty damn close. Now, that expected move radar, we built it, is proprietary to us, but the formula comes from the options market. That's how we figure out the expected return. Good night. Good luck, everybody. We'll see you next time.